Sun. Okay. Good morning, everybody. I'm coming on a little bit earlier than I have recently because I'm not feeling perfectly. So I was going to run a couple of errands this morning, but I'm not going to do it. So, as they say in parts of Virginia, I was up in a boot. So I thought I'd just come on. Finger Motion is having a good day. Let's see if we can figure out why. It's up 17 cents at 144. We currently have 17,450,000 shares accounted for, 17,450,000 shares roughly of Railtown. I mean, some people don't say what they have, other people might have sold, but it's a place to start. All right. Let's go with that. This weekend I tried to follow Djokovic, so I'm a little out of my sleep pattern, such as it is. But I gave up in the third set when he was broken. For some reason, I can't stand to watch Carlos Alcaraz celebrate. But he seems to be a good guy. So it's obviously something wrong with me. All right, let's see what's going on with Finger in terms of volume, price. 610,000 shares today. The stock is up 17 cents, 144 to 148. I really don't know what's the story. Glory, morning glory. ZJYL is up almost a penny at 14.5. MTEN is up 12 cents at 216. GDC's down a penny at 420, and Railtown is up barely 25.21 by 26.6, 42,000 shares. Let's see if we can find anything on Finger. Let me get some water. My head is cloudy. There's no evidence of anything going on with Finger in terms of news. Let me see if there's anything in filings. January 27th, annual report, but we already went over that. So sometimes stocks move before there's any information out there. Hey, Steve. I like that. I don't know why I can't get your proper handles. Don't know why. Hey, Red Pepper Ronnie. Hey, Jeff. I'm Bill. Hey, Jeff. Hey, Fast Eddie. And hey, Jim. Um, how are you? All right. So I don't know what I should lead off with. Um, I think I'll lead off with my yeah. I guess I'll lead off with what I consider the scenario. It's the bold one. Um, it counts on proper execution. It makes some assumptions, which we will go over as we go. But I think this will be the upside that we're exposed to, and perhaps the time frame. But so I think if I can find it, we'll go with that first. What's all this? Let me get these out of here. Let me just show you this. This has more to do with gold, but I want to take this down for space to have space. So let's go over it a little bit on gold. Um, Gold companies typically pay low hundreds of dollars per ounce in the ground with a wide range, of course, depending on the stage of development, the grade, the jurisdiction, and the quality of the asset, or more importantly, the quality of the analysis. Recent transactions across the globe in 2024, so that's before gold has really run. People paid $100 to $120 per ounce in the ground. There was a headline deal in 24. They paid 200 per ounce of gold resources, but they paid 500 for reserves. 200 for resources, 500 for reserves. That was in Canada. Back 5 years ago, they paid roughly 430, 440 for reserves. So you have proven and probable. This is probably more of a US description than Canadian. But you have producing and near producing mines. These are tier one. And they get the $500 valuation probably now. Higher cost, riskier jurisdictions get lower. That data is when gold was under 2,000. This is more Canadian, measured and indicated resources. You discount those. But measured and indicated still comes in the past, still comes in at $100 to $250 an ounce in the ground. And maybe in the low end, this is 2024, 100 to 120. Large, high quality projects with a clear path to getting to reserves, you can get closer to $200 an ounce in the ground for the gold. Deeply discounted and extremely deal specific, it can be $50 to $100 an ounce. Now remember, this stuff is information is 3 to 2 years ago. And you can tell that right here. They're using 1,800 as the gold price. Gold's over 5,000 right now, or was. Gold will probably pull back at some point, but I wouldn't expect it to go much below maybe 4,500 at the worst case. So you do a net present value per ounce calculation, and down here $270 balanced out on a reserves. You got to pretty much know it's there. So your tier 1 right here, 200 to 5, and again, this is 3 years old data. 200, well, let's say it differently. This is when gold was trading under $2,000 an ounce. So tier 1, shovel ready, they call it, reserves, 250 to 500 plus. Good quality resources. You can figure out how to make them reserves pretty quickly. 100 to 250, and inferred and moose pasture, less than $100. But again, this is when gold was under $2,000 an ounce. I really was unable, when I looked the other day, to find an adjustment for higher gold prices. Here's the 2023 Newmont-Newcrest merger, $200 and $80 on a resource basis. But that's because they were getting a lot of money for this. 2025 M&A analysis broadly support $200 to $400 per ounce of reserves. So P&P, proven and probable, the two Ps, roughly 200 to 400 for reserves in, tier 1, tier 2 assets, and high quality, low cost, strategic, you can get above 400. Riskier jurisdictions, which isn't Nevada, by the way. Higher cost operations, which isn't Nevada, by the way, are Nevada. Early stage, it's debatable. But that's probably what it would be considered to most people hearing it for the first time. Below 200 in 2025. All right, I got that out of the way. Just put it in your head. These are the options. You might get some money in on the options next month. This might be Tony. Oh, this is Corey. We went through this before. Might as well read it again, because who remembers it? Corey put this out at the beginning of the year. Happy New Year. 2026 is setting up to be quite the transformative year. AI agents are gaining traction quickly across an array of business applications, as the market for AI agents is expected to grow at 45% over the next 5 years. AI agents will start, or have already started, disrupting traditional software as a service by automating tasks and replacing workflows. For example, quote, "Why use QuickBooks when my own agent can do this for me," unquote. Now, I'm not suggesting QuickBooks is going out of business anytime soon, or maybe not at all. But the point is still the same. Agents are going to change everything. One can look at the recent trend of Constellation Software's market cap. Constellation has been a fantastic company, built upon a very sound SaaS value model. But the concerns of agent workflow capability versus traditional software as a solution has clearly had an effect on how many, had an effect on many analysts' opinions. Everyone can expect, every app, everyone, all of you can expect every app, whether it's it's a mobile app or a web application, you can expect them to be updated with agentic functionality. You can expect every new startup to be built with AI function or be built upon an agent development kit, ADK. And by the way, when you're reading this, they didn't come to this concept last year or this year or 2 years ago or right after ChatGPT. Corey and Marwan came to this 6 years ago and wrote a white paper on it. So they came ahead of the game. So with all of this said, I, Corey, am excited to introduce you to what the heck it is that we have been up to. I know many people have been curious. I used to have a girlfriend that would start a conversation with me. She'd say, I'm curious. She's about to go and, nail me for something. And I would answer her, yes, you are. She never laughed because it wasn't that funny, but didn't keep me from trying over and over again. I know many people have been curious. I am excited to say that our newly updated site, railtown.ai, is live. So this is a big part of marketing, which will introduce you, and by the way, new investors, to our end-to-end agent development platform, ADK platform, agent development platform, built upon our 3 core technologies: RailTrax ADK, agent development kit, build the agent; Rail Engine, real-time event-based ingestion engine, feed the agent; and Conductor, agent manager, observe the agent. All 3 technologies work independently or as one complete end-to-end kit. Please dive in and check it all out at railtown.ai. Roadhouse. All right, I'm going to take that down. What was this? Oh, this is, I think I read this. This is old in terms of our discussions. Capital investments to support AI-related data center capacity demand could, these are insane numbers, could range from 3 trillion to 8 trillion. The range itself is absurd. The range is 5 trillion. But you've got power in the, whatever that color is, chartreuse, that light green. I can't remember what color that is. Makes me think of crayons. And then you have IT equipment in the sky blue. And in the navy blue purple, you have data center infrastructure. My observation on this, and we'll go through it here in a second, is all of these companies from Microsoft, who got hammered the other day, to NVIDIA, and to AMD, Intel, AWS, whichever company of Musk's that matters, they're putting trillions and trillions of dollars on the casino table. I don't think it's something they can halt. It's not like you can launch the aircraft carrier and midway through the slide into the water, stop it. This is a trend that's going to see its way through, in my judgment, for the next 5 years. But if there are questions, and there are, about circular financing and when will this show a return, and is it sustainable? Is there enough energy? All of those questions. To me, it makes it all the more critical that the software on top of this hardware, if I can use software terminology, that the software has to make the user experience exceptional, cheaper than any competition, and reduce the time they use the compute power, because the compute power is going to be the most expensive ingredient of AI in the future. So but look at that number, 3 trillion to 8 trillion for data center capacity demand and capital investments by 2030. Both AI and non-AI workloads will be key drivers of global data center capacity through 23. AI workload is in the navy blue, and sky blue is non-AI. So I guess data centers have non-AI somehow. What's this? This is the collaboration announced on November 4th. TELUS announced Railtown will deploy advanced agentic software development solutions through TELUS's Sovereign AI Factory, leveraging TELUS's high-performance, fully sovereign infrastructure. Railtown AI will deliver cutting-edge AI-powered development tools to Canadian software teams while keeping everything in Canada. Railtown will deliver this through TELUS's sovereign infrastructure, which provides multiple layers of security, residence, and control. And it's all about that. It's all about Canada. Why wouldn't it be? If Canada were a minority in the United States, they'd have DEI protocols to make sure that Canada. I'm just kidding. What's this one? Impatience for victory guarantees defeat. Well, we've been testing this one. We've been testing this theory. Impatience for victory guarantees defeat. On the other hand, if you're up against a superior foe, that could lead to defeat too. And this is China crisis. Chinese use 2 characters to write the word crisis: danger and opportunity. I think we're in the middle of opportunity, but it is the same word in China. And is this supply curve? Oh, counterfeit shares on a stock price. The demand curve is the red, and the normal supply is the light green blue. So you got a higher price. If you add true supply with shorted shares, it brings the price down from, in this example, $20 down to $16. And if you add the normal supply with reasonable shorting to also counterfeited shares, if you use that word, it brings the price down to $15. So your difference in price is highly affected by excess supply of non-existent shares. And this is why I tell you, when people suggest to me that the Railtown price is telling you something negative, I don't believe it. Now, you may disagree with me where the green line should be, crossing the red line for Railtown. But in this example here, the purple line is far lower than where the true value is in this example. So let me take that down. I'm freeing up a lot of space. Oh, this is the financing for Lang Chain, 1.25 billion. I'm going to take that down. And the revenue, Lang Chain generated between 12 million and 16 million in annualized recurring revenue as of June. And they valued the company at 1.25 billion. I'm going to take this down too, but I want to remind you that the network has 170 affiliates. It's now higher, and they gives cross-selling advantages to 5,000 end users. There's high switching costs, so once they're in there, they stay. And then it has an enormous ability to scale up quickly, spread fixed costs. But down here in the deep yellow, number 6, opportunity to move the acquired assets and non-acquired affiliates, but let's just focus on the acquired affiliates, who currently spend approximately $120 million per year with various hyperscalers to a common lower cost platform. That's the TELUS data center, provides the capability to integrate affiliates application software on a single platform. That's the Railtown platform. What's this? It's too confusing. I'm not going to delete it. What's this? This is TELUS. Software development sector is a key growth area for TELUS's sovereign AI factory. TELUS is a world-leading telecom in more than 45 countries, generating over 20 billion in annual revenue with over 20 million customer connections through our advanced suite of broadband services for consumers, businesses, and the public sector. All right, I'm going to leave that off. I'm going to remind you, this is the difference between conductor and Lang chain. All of these things on the left, which I assume are good things, Lang chain gets a yes. Well, although the remote model support looks light, as it says, but otherwise it all is green. Lang chain has just 2 checks there. If you look further on the list, conductor has every green check mark. Lang chain has 3. Of course, that's for conductor. I assume it means all of their products, but who knows? All right, those were some of my assumptions before. The issue which has swept down the centuries and which will have to be fought sooner or later is the people versus the banks. No kidding. John Dalberg Acton, the first Baron Acton. Power corrupts. Absolute power corrupts absolutely. All right, let's read this before. I know I've read it before, but I'm going to take it down. By combining Railtown's AI expertise with Uniserve's established infrastructure, the partnership is poised to deliver transformative AI solutions that address the unique needs of SMEs. These solutions will help businesses streamline operations, improve margins, and compete more effectively in the rapidly evolving market. So partnering with Uniserve is a big step in bringing accessibility to our AI agentic frameworks and observability tools to their big SME audience. It accelerates the adoption of Railtown's technology, and it positions Railtown's products to be a key technical layer at the forefront of driving AI compute resources and being part of Canada's AI innovation ecosystem. Shared compute revenue streams will vastly outperform traditional SaaS models. And that's kind of where LangChain is following that traditional model, is my guess. All right, let's take that down. Unisurf has 3,000 small and medium-sized customers. They've got to prove this works, or they lose the customers to an AI service somewhere. So this will be a critical proof of concept. It's highly scalable. Unisurf's infrastructure supports the ability of Railtown's AI solutions to be rapidly deployed. And this partnership is further potential proof of Railtown's strategy of developing and growing its compute-centric revenue pipeline. Look at that. 160 companies in the network, 400 million in revenues. I'm taking that down. All right, I've built in some space here. What's this one? Oh, this is about silver. I've talked to you about silver. I'm not going to take that down in case we want to do that again. All right, let's go back to your comments, just in case there's a bunch of them. Oh, that's right. Happy Groundhog Day. You're right. And you say it twice. Sleepy Beaches. Still doesn't have a link for the Twitter link on the bottom of the new website page. How long will that take for this company to get that fixed? Real questions to ask for a tech company that wants to get bought for big dollars, no follow through or attention to detail shown up front. Sorry, William, only posting what I find. That is a picayune comment, but let's go. I think it is, but let's treat it like it's an important one. Let's see if Railtown even has a Twitter page. Railtown AI on Twitter. Of course, that's a detail that someone like you, Sleepy Beaches, would take the time to do. I mean, I'm just pointing out a little follow through, not trying to be unfair to you, just trying to make sure you do the work all the way through. It looks like they don't have one. Huh. But who does have one? Well, you've got Corey Brandolini, the CEO, has a LinkedIn profile. Oh, I'm looking on LinkedIn. I guess I got to look on X. Is that your question? Twitter. All right. Well, look there. Let's go to Twitter. Let's go to Twitter. I'm sure you did this. You looked to see if Railtown even has an established site. Of course, your brain isn't big enough to figure out reasons why they might not, but hey. I don't know what relevance it has to the business and the contracts. But hey, if you want to be anal retentive, I guess we can be anal retentive with you. Railtown. They've got Railtown Ventures at Railtown, Railtown Cafe at Railtown Cafe, Railtown Brewing Co. at Railtown Brewing, Railtown Catering at Railtown Caterers, Vivian Stewart at Railtown Law, Railtown Mastering at Railtown Masters, Railtowns at Railtown United, Railtown DD at Railtown DD, Railtown Food Carts at Railtown Food Court. So maybe they haven't established their Railtown Twitter page yet. What could that be about? Could it still fall under that umbrella that they're not allowed to talk about certain material information until it's widely disclosed? Could there be a reason for it? Of course there could. Let's see if Corey Brandolini is on X. Corey. My guess is he doesn't come down into the sewer of Twitter. I don't see him. So now your point is that a company as good as Railtown should have a link that works on the bottom of the website they just set up 2 weeks ago. And you think that they should focus all their energies on that instead of making sure the TELUS data center runs smoothly. I see that you put your priorities correctly. I really do. Honey, before we make love, don't you think I should go into the restroom, the bathroom, and make sure all the toothpaste and toothbrushes are lined up properly for the morning? Must be nice to be anal retentive. I do not see that Railtown per se has a Twitter site. So they've clearly made a decision, I think, to go LinkedIn. But your point is, well, why have the link on the bottom of the web page? Sorry, William. I'm just pointing out, if you can't follow through on that, you can't be a company worth a lot of money because I'm a dick. All right, at the bottom of the page, they have a link to the Railtown Investor site. They have a link to Twitter. They have a link to LinkedIn, and they have some other link that I don't even know what it is. Let me hit the other link. All right, that's YouTube. That works, but you don't point that out. Doesn't impress you. LinkedIn. Oh, that works. That doesn't impress you. I'm sorry, Sleepy. I'm just pointing things out. Dick. And then Twitter. It goes to a Twitter page. It just says something went wrong. It goes to @Railtown AI. So they've obviously claimed the real estate. They're just not using it. They probably know what a cesspool Twitter is. They want to deal professionally with real investors instead of people that slink around in sleepy hollows. Unbelievable. So have a link that doesn't exist next to links that do. It does exist, dickhead. Let me show it to you. Here's the link. They just don't use it. See it? At railtown.ai. You don't see it. They've got, to my understanding, they've got 3 executives, maybe 4, but I know they have 3. Corey Brandolini, Marwan Haddad, and Paul Woodward. And maybe Dr. Elliott has a place. You think that the best use of their time would be to populate their Twitter link up and get into conversation with the sewage on Twitter. That's what you think. Well, luckily you're not running the company. I'd be fired if I let that get posted. What, that they can't link? Who? Where do you work? Who'd you be fired from? Luckily, 1, you're not running the company, and luckily, 2, you're not working for them. I don't think it's a big deal. They have LinkedIn, they have YouTube, they have an active presence in their own blog, and they're holding off on Twitter for the time being. They just set up this website, railtown.ai. And if you go to railtown.aitechnologies.com and you go to the bottom of that, takes a while. They only use YouTube and LinkedIn. They only use that. They don't use Twitter. So maybe it's just a policy decision on their part. You don't know. Is it really that important to you? I'm not going to invest in NVIDIA because NVIDIA, they failed to follow through on a link on their website. I think, my friend, you should stick to day trading instead of trying to find value in companies, because you obviously don't put a lot of thought into your reasoning. Uh-oh. 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 Earthquakes up in San Ramon. One of my dear clients used to live there. I've been there many times. It's beautiful. It's moderate, though. All right, it's moderate. Moderate. El Dorado. Where is El Dorado? I can't open it because you have to, it's behind a paywall. 4.9 billion of treasure buried there. You know, I wouldn't mind maybe finding out where that is. Your gold company has much more than that. Just on the 6 million ounces, you know, just on the part that they already drilled, you have 4 times that much, potentially. All right, I have to get back to there, the quotes. Oh, it signed me out. So I got to sign back in. Honey, I'm sorry I can't marry you. The email you just sent me has a misspelled word on it. Unbelievable. Sleepy Beaches, I think I'm going to skip. Julius, when do you feel Railtown will go to 40? Well, we'll talk about that. I'm not sure. I mean, Julius, that's taking a pretty blunt summation of all we've talked about. I believe let's go through it. Can Railtown go to 40? Let's reverse engineer that. If you assume a $40 valuation, you've got 210 million roughly. Maybe it's more, a little bit, not much. Shares fully diluted. You've got 190 million or so, 93 million issued and outstanding. But anyway, if we do it with that, that's an $8.4 billion valuation. When do I see that happening? I don't know the answer. Can't know the answer. Where do I see that happening? Will it happen as Railtown is a standalone company, or will Railtown be purchased and then that value increasing happens inside of a bigger company? We don't know that either. What revenue multiple, if that's the reason for the purchase, would get Railtown to an $8.4 billion valuation, let's say at a 35 multiple? You'd have to see Railtown projected at 240 million in annual recurring revenues for a forward 12 months and growing. When could that happen? Well, frankly, let's see if we can work out a path to showing 250 million in annual recurring revenue to Railtown from just those two sources. The data center with TELUS, let's just look at the 125 million plus spend by the current network companies at other hyperscalers. They need to spend that money so they can build their product that they then sell to their customers. It's not a choice. It's something they have to do. That's 125 million or more that will be moved over to the TELUS data center to share revenue. So let's just say it is 100. Let's assume no growth. Let's assume no change from 160 companies to 200. Let's just take that number that they had there, 125 million. I'm going to assume 20% goes to Railtown. Oh God. So that's 25 million in ARR comes to Railtown. From the data center and the network companies. Why can we be confident of that number? I would say we can be confident of that number because Railtown owns AIP, the AIP network. Railtown owns it. So I think we can be confident that they are going to be able to move $125 million Not tomorrow. Doesn't have to be tomorrow. It just has to start ramping so that it can be calculated by an analyst or a auditor. Well, it looks like 25 companies moved over in February, and it looks like we can tell another 30 are coming over in the first week of March, and we know these others are working on it. By the time they get board approval or whatever the hell approval, we think we'll have all of them moved over by the end of June. That's all you need to happen to get it credited in the research reports. So that's 25 million in ARR, which I would put a high probability of coming to Railtown and being visible. I'd say over the next 60 days, you have the potential to get started on that, and then the visibility of it being able to happen across the network. And what's your margin of error? Well, this is only about 125 companies. They have almost 200 in the network. That gives you some margin of error to play with, to have a high degree of confidence this is going to happen. If you use a 35 multiple, that gives you almost $1 billion of value there. Maybe a 40 multiple gives you $1 billion worth of value there. Where else is Railtown going to get revenue? Well, we don't know. We don't know for sure. But it looks like, number one, Canada collectively, government, province, university, think tanks, capitalists, funds, and entrepreneurs have decided to make a Canada first sovereign fortress to keep all Canadian data and Canadian profits in Canada and away from Donald Trump. So in that environment, TELUS, one of the top 3 telecom companies in Canada, one of the top 3 internet companies in Canada. And by the way, if you live in Canada, do business in Canada, you have to do your internet hookup with a Canadian. And TELUS is the first telecom to bring to market a Canadian-centric sovereign data center based on NVIDIA's best, based on hydropower, based on HPE's best, probably, I'm going to guess, Cohere's language models, but it could be somebody else. But Cohere's Canadian, Anthropic, and the rest are not. But we'll find out. And TELUS did a deal with Railtown to be the brains, the orchestration, the conductor on top of that neural network so that the thoughts get organized in a way, the connections of all the compute memory down below that pops up when you say, you know, who discovered the Hudson Bay, and all sorts of things connect. You need an orchestration framework to gather all that popping and fizzing and pinging and create it into a usable and followable data set. And Railtown, unique, better than LangChain, Railtown offers that data, that fixed data analysis. It offers the real time. So if you want to set up, I don't know, Tesla's taxi service in Toronto, you can create the real-time data. It's different than how Tesla has set up his cars to drive around, but it's there for that real-time data. Or if you want to set up, if you're a short fund and you're killing market caps across the industries, you can set up your data now using AI, and this real-time source of data will give you advantages against your competition. That end-to-end service is Railtown. In the middle of it is the conductor that makes sure it stays on track and that you don't use too much compute time and that you don't get into endless loops, and it secures your data, and et cetera, et cetera. It's the parent in the room. And so nobody else offers that. That's going to be on top of the TELUS data center. We know that. Is it exclusive? We don't know that. Is it better than the competition? I think so. But we don't know it for sure. We know that Darren Entwistle projected in his last earnings call, and Ward just let me know that TELUS's next earnings call is next week. So we should get an update on that. But he said that he expects from his AI-enabled technology to generate $2 billion in annual recurring revenue for TELUS. It's his words, not mine. So if we assume, one, TELUS has the first sovereign AI factory data center ready to go, and it's already open for business, by the way. We know that as a fact. If we assume, two, TELUS's second factory is coming on in February, and that's a fact. If we assume, three, nobody else is going to have a data center opened probably this year. That's a bit of an assumption, but you got to buy the land, you got to get permits, you got to power it, you got to build it, you got to order the chips, you got to get the stack. There's a little bit of a lead that TELUS has. Five, if we assume TELUS has spent billions of dollars building that data center, and Darren Entwistle has said, this is going to be our target, we can maybe make the assumption that getting revenue out of those data centers soonest and fullest is a major priority at TELUS. Of course, we have to adjust that for the public service announcements that they issue every week, it seems. If we assume, because TELUS has 20 million customers, that just a small percent of that are small and medium-sized enterprises, and they move over, we might be able to assume that the revenue will move over quickly. It might be new revenue because all of the old software has to be replaced with ADK generated software. So in other words, a moving from another hyperscaler here isn't static. It might be growing. And if we assume that Darren Entwistle knows his own customer base, we might be able to assume that he is, in fact, going to meet his goal. And I think it's the data center. I don't know what other technology, AI-enabled technology, a telecom offers other than their data center. I think we can assume $2 billion revenue coming to that data center. Now, again, it doesn't have to be booked in February. As it starts to come, as long as it's projectable that it will reside in that data center sometime in 2026, 27, even 2028, and once resident, it stays, analysts can project annual recurring revenue for forward 12-month period, and they can assume that it will repeat every year after that. That's $2 billion. Now, how do we know Railtown's going to capture a shared piece of all that? We don't know that. How do we know that that data center is the only source of AI-supported technology? We don't know that either. How do we know that TELUS doesn't have to share some of that revenue stream with other software companies? We don't know that either. So for me, the way to risk that, instead of $2 billion, I use $1 billion. That takes 50% off of the target. That's a pretty big swath. So you have $1 billion, and I use 20%. It could be 25%, it could be 30%, it could be 35%. On the other hand, it could be 15%. I don't think it's as low as 10%. I use 20%. So the question is, how quickly and how motivated is TELUS to meet their own CEO's projections of $2 billion? How quickly can they cause to move in the Canadian ecosystem that TELUS is number 3 in, with $20 billion in revenue, with 20 million hookups? How effectively and quickly can they motivate movement to this data center so that software, SaaS, SDK software can be upgraded and replaced with ADK software? How quickly and motivated is TELUS to do that? They've spent $5, $10, $15 billion. I will admit, they've got to put out the press releases out there that a tribe of native population, men have dominated over women, and we're going in there to help the young girls of that tribe create a future which is female, and therefore we've started a school which we've funded with millions of dollars, and we're hooking up to our telecom. They will do those things as a priority before they focus on announcing these kind of revenue things. I agree with that. That's very Canadian. It's very woke. But I don't think a company puts up 5, 10, 15, $20 billion to build out their new data center strategy and they're going to ignore it. So on $1 billion, at 20%, that means the shared revenue split that comes to Railtown might be $200 million. So how quickly are those two numbers going to become evident to the market, to institutional investors, to analysts, to the hyperscalers? We don't know that. My opinion, which may be right or wrong, my opinion is that the TELUS data center has not had a hard open yet. It is open. They have 3 customers from the summer. And I should find them. It doesn't matter. One's a healthcare, one's another thing, and another thing. To me, that's the trial run. That's to prove the NVIDIA chips are working, the HPE, whatever they have, the stacks are working, the electric hookups, the copper, the energy, the power surges and failures and ramp ups and ramp downs. They're taking it through the paces. We just found out that Railtown's rail engine, they just finished it last week. So do they have to test that? Have they already tested that? Is it still in a secret place? I don't know the answers to that. Tony might, but I don't. If we assume that the platform that Railtown is putting on the top of the Telus data center is rail tracks, rail engine, and conductor, one might assume, and it might be a bad assumption, that any sort of dry run testing of rail engine, conductor, and rail tracks had to be delayed till the rail engine is ready. So it's possible, although not a certainty, it is possible that we have another 30 days of testing, or 2 weeks, or 6 weeks of testing. We don't know. And my suggestion to you is that is not being told to anybody unless they've signed an NDA or a non-compete. And they're going to keep their mouth shut. And more importantly, they're not going to front run investors in the market. So this is a total of $225 million in annual recurring revenue. Your question is, how quickly does this happen in reality? But also, probably more importantly, how quickly does this path get proven or at least highly projectable with a high degree of confidence? We don't know that either. The other part of your question is, is there something unique and critical and almost irreplaceable about the Railtown platform? Is the Railtown platform a leap in performance and user experience that causes the success of AI data centers in terms of profits and revenue and user acceptance in Rimouski, but then to the people who make decisions at Microsoft, Amazon, Google, Facebook, SpaceX, Oracle, AMD, INTC, Telus, Constellation Software, large investment banks, TD, Ameritrade, wherever the money is and the interest is, will they look and say, you know what? Railtown, because of its intellectual property, because of its head start, because these things take years to establish, or maybe not, Maybe NVIDIA can throw 5,000 developers into a gymnasium, pay them each $100 million, and get a solution in 10 days. One would ask, is that the best way for NVIDIA to spend hundreds of billions of dollars? But it's at least theoretically possible. So one part of your question is there something must-have about the Railtown platform? And will the TELUS, and Uniserv for that matter, production, well, that's oil and gas terms, use at the data center prove that criticality and the revenue streams, not only just for Railtown, but for TELUS? Will that stickiness and that improvement in user experience, which means cheaper, more productive and efficient, obviously same as cheaper, make Railtown's platform the must-have platform? We don't know that either. We don't know that either. If you can allow me, as I've done before, it just is easier to do this step now. If you allow me to divide this ARR by 210 million shares, it's $1 a share in ARR that we're talking about. From two sources that I think we can predict. We don't know it yet, but I think we can predict. So that's $1 a share in ARR. We don't know So it's $1 a share in annual recurring revenue. We don't know if it's a critical must-have platform, and we don't know the rate of growth. And I guess we don't know how quickly that dollar becomes visible. We don't know these things. What do we know? On the $1 a share ARR, we do know the things we do know we know on this this $1 in ARR per share, we know it's 100% margin, or as close to that as possible. We know that our estimates on the network and on Darren Entwistle's projections are reasonable. We don't know it for sure, but it's reasonable. We are only factoring our network on 125 out of 200 companies. And on the Entwistle target, we're taking half of it. So it's reasonable. That doesn't mean it's guaranteed, but it's reasonable. And we also know there are a lot of data centers out there. So what's ahead of us? And when? I don't know. We've been waiting a long time under this thing I call a quiet period, which is the incorrect use of the word if you Google it, apparently. So I don't know what else. This blackout, this veil of secrecy, this prolonged squawk. We have not been able to get any confirmation at all, one way or the other, on this evidence/theory. We haven't, it's just been silent. So we've been waiting a year. Next week it'll be a year. Does that mean we have to wait another year, 2 years? Tony tells you to wait 2 years? Spread your money thin? Is that the way to go? I don't know. I've been told he's really good. And I'm childish to question it, so I'm not going to question it. But the answer is we don't know. But a better answer is the TELUS data center ready for business? Well, I think they've taken at least 6 months making sure it is. Is the TELUS data center ready for business and Railtown on top ready for business? Is there an alternative to Railtown if Railtown's not ready? Doesn't look like it, but we don't know that for sure. So the follow-on question is, well, when the data center's ready, when Railtown's been tested and ready, if it hasn't already been done, can the data center scale quickly? Well, what do you think? Do you think the data center is been designed to hook up one user, like you send a group of guys and girls out to the location with a truck, and you will be there in a window between 10 a.m. and 2 p.m. if you're home, and then it takes an hour to hook up a box and hook all that up? Do you think that's how it's done? Oddly, that's how the last transformation in the computer world happened. But it's already in place. All those copper wires and land wires and light pipes, they're already in place. The fact is, now it's just taking your TELUS account, signing in, logging in, and clicking yes. I want to save money on my electric costs. Yes, I want to use the state-of-the-art data NVIDIA factory. Yes, I want to stay in Canada with my data and information. Yes, I hate Trump. And boom, you set it all up. And like that, you're moved to the TELUS data center? Do you think they haven't prepared it that way? And then the question is, how many people could sign up to that data center? How many companies? Is there going to be a bottleneck on the website? What do you think? Don't you think they can set up a scalability ability that rivals people buying Taylor Swift tickets online when she announces a concert, or people going online to watch a soccer match or a Canadian curling match all at the same time? The obvious answer is yes. They can scale that data center, new customers, rapidly, in volume, and practically all at once. Question is, why haven't they done it yet? My opinion is they haven't rolled out the product yet. They haven't had a hard open yet. So if the data center is ready to scale up, is Railtown ready to scale up? Railtown, from the minute it was white papered and built, was designed to scale either 10 users, 1 million users, 10 million users, 100 million users, all at once they can scale. So you have no limitation, as far as I know, in the ability of that data center to attract from 0 users, or 3 currently. Pick a number. 100,000 corporations? 10,000 corporations? 1 million corporations? 10 million corporations? Entities? All sign up at once. So you could see a ramping in usage in a matter of days or weeks. All depends on the decision process. And you can see, therefore, revenue start to flow through the data center collected by TELUS on some agreement that's split with Railtown on some percentage. We don't know if Lang Chain's there or Applebee's ADK is there. We don't know. But if we assume, since they chose to work with Railtown, that Railtown's going to get a preponderance of it. And remember, I went from 2 billion to 1 billion to try to adjust for all of that. I think it's entirely possible, as soon as they decide, that being TELUS, to trumpet that they've opened this data center, I think you can see usage ramp up like a reverse ski slope. Okay, if you see that, can analysts project revenue? I think so. I think so. When will the revenue start? When do you pay your internet bill? Once a quarter? Once a year? Once a month. So revenue can start monthly. So I think it can be very quick that awareness happens of revenue growth, of projectability of that revenue, and I even am willing to predict that they can get to 100, 150, 200 in future predictions of 12-month revenue very quickly. But when are they going to open the data center? I know it's already open, but when are they going to really be ready for the mass influx? I don't know that answer. I'm going to guess it's somewhere between February 15th and March 15th, but we really don't know. So to get to $40, there's 3 variables. I'm sure there's more. I can think of a 4th one, but I suppose it's built into the first one. Okay, so I think there's 3 variables. One is what multiple is applied to the dollar in revenue. That has something to do with how many bidders are there. It also has something to do with the growth, and it has something to do with how important it is to own Railtown to keep your competitors from having it, or how important it is for your own survival as one of the big 7 or 9 companies. So we don't know the multiple, but we also don't know if the multiple is the relevant factor if the companies are just buying it to make sure the other company doesn't own it. But anyway, the multiple. We don't know when it's going to be acquired. Is it going to be acquired early in the process? Is a Microsoft or a NVIDIA going to come to Railtown and say, we'll buy, we'll buy you by the end of February for $700 million. I'm making it up. Well, if they do that, we're not going to see $40 a share. And then that goes back to how many are bidding, because if there's more than one bidder, that price could go up. And then the final question, which is probably the most important, to get to your $40, I think it was $8 billion in value. Where is it going to occur? Is it going to occur while Railtown stands alone, or is it going to occur inside of Microsoft, inside of NVIDIA? And we just don't know that. We don't know any of that. So Railtown could achieve $40 a share valuation, but you might not experience it if the company gets bought early, or if there is no bidding war. But we don't know. These are variables. You want me to predict all that. How the hell am I going to predict all that? But I'll tell you what I think. I think as soon as this, I can't use the word quiet period. I'm not allowed to use that. I think Justin or one of those guys pointed out to me that that's not the right definition. But as soon as news comes out so that this blackout ends, I think that's going to be key. And I think that's coming soon. I think it's tied to TELUS, but I could be wrong. Maybe the Queen of England is buying data centers in Canada. I don't know. There's something pending. Secondly, I believe the rail engine should be part of a testing process that Railtown might do. I don't know how long they have to run it through its paces, but it makes sense to me that if Rail Engine wasn't ready until last week, that it hasn't been tested full on that data center. So it makes sense to me that Thales and Railtown might be delaying the possible wave of new customers coming on until the Rail Engine is fully tested and put in place. I don't know how long that takes. It might be an hour, it might be a month. I really don't know. But once that happens and the Thales Center is open for business, Uniserve is open for business, what I think is going to happen is the ramp up is going to be fast and furious. And I think the revenue projections are going to be visible and vividly so. And in that environment, I think the price movement of Railtown could be swift. Severe, I think I wrote it to somebody, swift and severe and swift, something like that, but very quick. So to get to $40 a share, we need $8 billion in over $8 billion in enterprise value. Question is, when does the market see the revenues and the revenue growth? When does the market either judge Railtown's platform as critical or nice to have? When does a hyperscaler like Microsoft, a stack provider like NVIDIA or others decide, you know what, we got to have that? When do they make a bid? Early in the process or later? That's about it. I can't predict any of that. I think that based on Rail Engine being completed last week, that they probably take a fortnight at a minimum to test that and install it, but I don't know. So I'd say mid-February, but if they take a month, let's say March. But once it starts, I think the movement to the Thales data center could be a rush. And then a lot of unpredictable decision making and reactions. But your question is, you want me to know, you want me to say when it's going to go to 40. I used to give, my target is 55, by the way. If you give projections based on revenue, purely possible. But the motivation to buy this company might be more than revenue. It might be to cock block AWS. It might be to leapfrog Google and bring a process in-house at Microsoft that can compete with Gemini. I don't know. I don't know. None of us know. But how much we experience in the shares of Railtown, that we don't know either. If Microsoft came and offered $10 a share, $2 billion, that's the LangChain valuation right now, in my judgment. $10 a share. I think Railtown's better than LangChain. $10 a share. But Microsoft's internal analysis is this is going to be worth 40 or $80 or $100 a share. I mean, they wouldn't break it down that way. They would just say, this is going to be worth 20 billion to us, or this is going to be worth 50 billion to us next year. That means you're not going to experience the $40 a share. You're going to be bought out at 10, and then whatever Microsoft stock does is all your upside's going to be. And by the way, it's going to suck, because I think it's possible this summer or the third quarter, we have a market crash. And who knows that Microsoft even doubles before that. So, those are variables I just can't predict. But if I had to put out a timeline as I see it right now, I think mid-February to beginning of March for the rollout, let's call it, even though it's already open, of the TELUS data center. I put it sort of beginning of March, middle of March, that it's going to catch fire, and the bean counters at Microsoft, NVIDIA, perhaps Omer's or Ruffalo's shop, or Constellation Software, TELUS, all start noticing, my gosh, this thing is growing like gangbusters. So I'd put that sort of mid-March. When does it show up in research reports and stock price and all that? Again, that's kind of unknowable, but I would bet sooner rather than later. The only two things that could make the stock go to $40 before a buyout is a buyout bidding war, and the first offer is 20 billion. That could happen. Or a short squeeze, which I hope does not happen. But otherwise, I don't see the stock going to 40 on its own nature in any time frame that you should be asking me that question. We have to hope that Railtown gets the must-have tag, must own it to block others tag, and maybe it gets bought out at a confluent valuation. That's what IBM bought. I think that was 11 billion. It might have been 13 billion. But at 11 billion, that's $52 a share. If what Railtown has is as good or better than Langchain, and that's not the only competitor, but it's the closest comparable, I think Railtown quickly goes to 2.5 billion in valuation. I could be wrong. It goes to 1.5. But at a $2.5 billion valuation, that's $20 a share. At a sorry, 2.5 billion. Sorry, that's a $12, $12.5, $15 valuation. I think Railtown goes to $7.50, $10, $12.50 really quickly once the floodgates open. where it goes from there is going to depend on a lot of those variables I talked about with you. But if someone at Microsoft and someone at NVIDIA and someone at TELUS and someone at Constellation Software, to name just a handful, somebody at Microsoft who is already partners with Railtown says, my gosh, this is growing, and they say, we better buy it before somebody else does, it could happen fairly quickly. I still think that this is going to be a case where there's an unsolicited bid for the company. I don't think it's going to be in the first quarter. But I think it could still be in the first half of the year. So I would say the move to 750 range happens if TELUS opens the floodgates and the ramp up occurs. If Railtown is adjudged to be equivalent or better than LangChain, it's just a snap to LangChain's valuation. And that's, I don't know, $5, $10, $15. We'll find out. A bidding war would happen right away if people watching say, oh my gosh, we have to own that company. And then you could get a bidding war and you could see your $40 if there's a massive bidding war. But if it's just one offer, very reasonable offer, maybe it gets bought out at $10 or $15, and that growth to $40 happens inside of Microsoft. So it's a hard call. I think we're going to want to wait till whatever offer happens, because if you were to sell the stock, as the Charm Boys and probably Tony, I don't know, can't speak for him, he's probably going to tell you to do, so you can go get further enmeshed in AME or GMC, you got to pay taxes on that. By waiting for the buyout, that step up in value occurs without having to pay taxes. Obviously, if you sell the acquiring company stock, Microsoft or NVIDIA or whomever, then you have taxes. But it might just be a case where we see who buys Railtown. And it might be, I can't remember the gentleman that sent all those examples, but there was an example of a company Google bought for some price. And I don't know if it was, I can't remember now. And there was the couple from Microsoft that inside the company, they became huge trillion-dollar valuations, or hundreds of billions. And we might have to live with that, but I just don't know. The only thing that could short circuit all of this is if Railtown for some reason entered a short squeeze. And I really hope that doesn't happen. That'll send us all back to the Charm Boys, back to Tony's way of thinking, 3-card money, dash and grab and dash. Read the charts, all that stuff, and I want to get away from all that. But anyway, sorry for the long answer on that. What's this? It's details that matter. When you're building a company and you spend the money early to protect your intellectual property, is that more important than making sure a link to a cesspool of Twitter commentary works? It does work. I just showed you it works. They just don't populate it. And I think that's smart. That to me, that gives me great respect that Railtown isn't populating a Twitter page. They spend their time on LinkedIn. I think that's far more professional. And then you make the statement, it's details that matter. Well, I think your detail prioritizing is wanting. I do website development, and it literally takes 1 minute to fix that, William. I know what I'm talking about. All right, let me show it to you again. We go to Railtown, and by the way, I respect your ability. I don't have your abilities at all. If they asked me to sign in to my bank account, I wouldn't know how to do it. So anyway, right at the top of the page, you see that Railtown AI. Okay, I'm going to sign in. Click. All right. So here's the website. Railtown, the agent, conductor, agent. This is first. It's Railtracks, the agent developer kit. Then you scroll down, and it's Rail Engine, the real-time event-driven intelligence. And then you scroll down, and it's Conductor. I'm sure you would have developed this website better, but it works for me. Conductor, agent observability platform. Okay. So then we scroll down to the bottom, and at the bottom, we see YouTube, LinkedIn, and Twitter. You're with me that far. All right, so I hit Twitter, and that's a Twitter page, at Railtown AI, at Railtown AI. But it's not populated. It's the Twitter page. I can prove it by hitting home. I hit home, there's Twitter. So you're just wrong. The detail you're talking about, it does link to Twitter. They just haven't populated their Twitter page. And I think that makes sense. I actually think that detail makes a lot of sense to me. And this is a lie, or it shows that you do not have competency at your own chosen profession. To have a link that doesn't exist next to links that do, it's just, the link does exist. The page is empty, that's all. So don't misrepresent. Don't tell us that you're a talented website developer and then misrepresent what you see. Or maybe you are limited. I'd be fired. Well, I don't think you would be. You've got a fantastic talent. So I don't think you'd be fired. No, my point is they have useless links on a web page that is published for a company and wasn't fixed in the following day at the longest. I don't see the uselessness. They link to LinkedIn. They link to YouTube. They have all the data on all of their platform. And by the way, if you go up to the top of their page right here, and you hit that, you're going to see rail tracks, rail engine, conductor, careers. Maybe you should sign up, and blog. Now I'm going to take a risk here, but I think that blog, yeah, you go to the blog, it all hits up. You've got all sorts of information on their blog, page after page. So I don't buy your criticism. last thing, Tinker. All right, Tinker. I can look into Tinker. Is it a competition? I'm getting cramps in my hand, so can't read my handwriting. Let me see what Tinker is. Tinker Bell, Tinker Tailor Soldier, Tinker Bell Movies, Tinker Toys, Tinker. Well, let's just see what Tinker. Dictionary, Tinker, a person who travels from place to place. There's a Tinker, Tynkr. Is that what you mean? Coding for kids, kids online coding classes. Tinker, coding for kids and teens made easy. This one, Tinker. Let's see if they have an investor page. Tinker apps. No, they don't have an investor page. Then there's Tinker Thinking Machines Lab. Tinker handles scheduling, tuning, resource management, and infrastructure reliability. All right, that might be what you're talking about. Tinker is a training API. That must be what you're talking about. The website's actually Thinking Machines. Thinking Machines. Let me write that down. Thinking. I can't write. Can't write. Thinkingmachines.ai. Control every aspect of model training and fine tuning while we handle the infrastructure. That sounds like something, that sounds like a competitor in some ways anyway. Forward, backward, perform a forward pass, optimum setup, sample, save state. Do they have a contract with TELUS? Owen. So they just use Owen. No, they use Llama. The Llama is a quadruped. They use GPT and DeepSeek and Moonshot. And they use LoRa, L-O-R-A. I guess they do something with Berkeley, Princeton, Stanford, Redwood Research. What is Tinker and who is it for? Tinker is a flexible API for efficiently fine-tuning open source models with LoRa. I'm a little confused. You understand what open source is, but I don't think that's Railtown's bailiwick. That's LangChain's, but I think Railtown tries to be a vertical model. It is agnostic to, it can ingest 30 or more different software protocols. But I think it's more about using the data within your company, not going out and bleeding it all over the internet. But I don't know. There's at the bottom, there's no LinkedIn and there's no YouTube or Twitter. That's something, that's a detail that I find troubling. They have a blog though, which works. They have a blog. So that detail is working. Tinker, general availability and vision input, call for community projects, Tinker research and training grants, on policy distillation, announcing Tinker, LoRa without regret, modular manifolds, defeating non-determinalism in the LM interface 101. Or is he in collaboration with others? It looks very interesting. I'm not sure what you want me to see. I will pass for now. Thanks for your time, William. Cheers. Well, thank you for spending time with us. I think if I were considering an investment in a company, if they put a link, an X link to a page that they don't use, oh man, that would be a red flag for me. The Daily hates Trump. But they're saying Tulsi Gabbard did something wrong. I don't believe it. Julius Quinn, how about 40 cents? I don't know. I think in many ways, what's going to happen with Railtown is almost like an on-off switch. Guys like Sleepy Web Developer can come on with a complete non sequitur and distract me and others. Oh yeah, that's got to be a bad company. They can't get a link, an X page up and running. Who gives a crap about an X page? I have X. I barely use it, although I'm probably going to have to use it more. 40 cents could happen any day. I think the stock broke out last week, although this trend down has been, it's sideways, has been a little bit time consuming. I think the stock broke out of its downtrend. And let me just look at the chart. I use the Canadian chart for that because it's clearer, but let me look at the the US chart if I can tell. I'll try to show it to you. Yeah, I think it's great. So let me take a picture of this and show you what I mean. It won't be perfect. Of course it won't. Why can't anything ever work when oh, I got to click. See, they changed all the rules on this. All right. So if I go like this, okay, that does it. And then let me put another color. I'll put a blue. And I will go to, yep, actually it matches for a couple reasons. And we'll save this. We'll save this. And I'll show you, Julius, what I'm talking about. And it's all fitting the pattern we called a week ago. I just have to send this to myself. So I can download it. But I might have to show it to you after I go through some more of the comments because I don't want to lose the comments. But I'll show you that. My answer on the 40 cents it could happen in 24 hours. It could happen in 48 hours. It could happen in next week. It could happen this week. When it happens, it'll be quick. I think it's already set up to move to 40 cents, just like that. So I think it'll be very quick. Cautious investor, at this point, it seems like you get on here to vent and be condescending to people. All Julius Quinn did was ask a simple, innocent question, and you just went off for a long time. Yeah, I thought his question was good. I did go off for a long time, but I'm not upset with his question at all. I'm probably more upset with the idiotic question about X. I think that's totally idiotic. I'm not here to vent. Am I condescending to people like you? Yes, because you only have one goal: fear, uncertainty, and doubt. And it's beneath you, and it's beneath Sleepy Hollow. 40 cents. I'll show you 40 cents. Caution, have some self-awareness. No need to go off like that when people just want your opinion. No wonder you turn people away. Yeah, that's probably true. I'm probably someone that's hard to like. I'm not here to I'd like to make friends, I'm sure, and I'd like to be a a simp to everybody out there. But to guys like you and Sleepy Hollow, you're here to make people doubt this investment. And I got to tell you, there's enough reasons to doubt it without your non sequitur comments. So that's why I do react to it. But thank you, cautious investor. I thought I had blocked you. Rondell stopping by to say thanks for all you could do. Thank you for being here. Giuseppe, we didn't know for sure that Sleepy was a fudster until Cautious commented. It was Barzini. It was Barzini all along. I didn't know until today. It was Barzini all along. They're going to come at you. They'll come at you like a friend. I never knew Barzini. That's great. All right, I'm gonna block this guy. And frankly, I'm getting rid of Sleepy Beaches. All right, DMAC. Hello, thanks for coming on. Appreciate it. Look forward to your chats. Thank you, DMAC. You obviously tolerate my getting worked up. Let me see about what I want to show this chart to Julius. All right, let me see if I can find it, Julius. This is the chart of Railtown in the United States. Julius, do you see the yellow wedge, the yellow wedge? I don't know if I'm reading it correctly. That's what I see. Somebody with more talent than I have might see something different. But I see a declining wedge, which is an extremely bullish pattern in my limited experience. And in fact, I could argue this wedge goes further back, but for the time being, let's just say that's it. The other day, the stock finally broke out of that wedge and it went sort of lickety splitting straight up. It went through the 20-day and hit the 50-day moving average. And then the computers, they use computer programs. The computers started selling, and other people maybe that use day trading patterns. So it flitted around on that moving average, and then it's come down. And I told you then that this could go sideways, but it's certainly whoever they are going to try to make it come down and test that top line of that wedge. Now, the way I draw the wedge could be wrong. Maybe you've got to have it on a slightly less steep angle, or maybe it has to be more steep, or maybe I'm being too broad. Who the heck knows? But in general, this trading range, in my opinion, gave you support on the lower yellow and resistance on the upper yellow. When it broke through that resistance with volume and strength, and obviously the bid went through it, it ran up to the next resistance, which if you look horizontally, there is a bit of horizontal resistance there. But it's mainly that I would bet, it's mainly that the computers saw the 50-day moving, or I guess it's the 50-day moving average in blue. So then they take that as a time to test the selling, and it didn't work the first time. The market had some resilience, and the second time it got to that moving average, they tested it again. It's all automatic selling. It's all crap. They're all selling toilet paper. And it drove it down. So the market now, many of you think that these prices are telling you something. To me, it's just computers trading against each other. And then we get in most situations, we're there to be shorn. But anyway, it comes down. And essentially, now I'm not saying my drawing is perfect, but essentially it has come down to the top of what used to be resistance is now support. So it's bounced a little bit. Now, looking at this, it's a little bit like a soft tennis ball bouncing. It can come down here and bounce and then just do a few more bounces and settle in here and go sideways now. It's possible. Or it could be like a super ball and it comes down and bounces and the next bounce is up. The way I read this, Julius, now it may not, like I'm saying, it may not be tomorrow. It may be next week. It may be in 2 weeks. This could go sideways. It's possible. But I think it's broken through that pattern. And when it finally breaks through this horizontal here at about 30 cents, I think it's going to snap right up to this blue line. Now, it's going to go through the 200-day moving average, and they'll do the same thing. They'll try to bring it back down and puncture that. They're just looking for air pockets. They're looking to see if the buying's real. They're looking to see if people have put stop limit orders in. And they're relentless. They don't respond to fudsters and all that. But I think the next move is to 40 cents. And this nightmare that we've been through, which has been painful, and I've been wrong about it. If I were good at what I do, I would have warned you that when it breaks the 200 moving average, you better get the hell out. But that's a day trader's mentality. It worked here. But if I told you to get out here, I'm not sure you would have bought back in here. Number one. Number two, my kind of scuttlebutt, if nothing is privileged, has always been that Railtown's on the verge of almost imminent events, that's the wrong word, but imminent buying pressure to come in. So this breaking down below the 200-day moving average, I mean, it's not sacrosanct. It could have come down and then rocketed higher based on events. I personally think it's more risky to be out of the stock. And I think whether you get in at 60 cents or Tony the Tiger 48 cents, or you get in down here or anywhere in between, by the time this catches up potentially to Langchain's valuation levels, you're going to be glad that you got in. But so, Julius, I think the 40 cents could happen tomorrow. It could happen next week. I guess the trigger would be if there's strong enough volume and it goes through 30 cents. I don't see what stops it from going to 40 cents. But then they could try to move it sideways there. Also, down here, they're going to try to move it sideways. They're going to try to depress it, and they might be successful. We're waiting for some unknowable release of information which allows research and buying to come in from knowledgeable institutions. It hasn't happened yet. All right, I'm going to take that off. And I'm going to see if I can change the topic a little bit. It goes to what Julius was asking. And darn it. Everything looks the same. So I guess I'll just start with that. I might have already shown you these things. Let me see where the... You know, sometimes stupidity and obtuseness does get me reacting, and I'm sure it's not fair. But I really don't tolerate stupidity unless it's, if someone's a good person, an innocent person, I'm not going to ridicule them for being stupid. But stupidity that thinks it's smart, it makes my head hurt. And obtuseness makes my head hurt. And sometimes I overreact. Fingers up 20 cents at $1.47.5. So anybody that bought calls must be feeling pretty good. Let's see what the volume is. We should look at that chart maybe. 650,000. I don't know. If I had to guess, which is just a guess, they're about to do a financing. And so there's a coordinated effort to get the stock price up so they can price it at $1.25 or something like that. All right, Railtown now is 25.81 to 27.11. And going, Julius, to my point, I think that 25 cent, 24 something cent range was the, I don't think it's headed back down there. But we'll find out, of course. Oh, sorry to yawn. Let me see if I've shown you any of this before. Okay, I think this is the first one. All right, it is new. I guess it was Perplexity. I asked them about OpenAI, and here's the answer. I'm going to go through this. This is going to take probably about 20 minutes. Yes, the combination of uncertainty around OpenAI / Microsoft, and 2, mounting concern over AI infrastructure and data center costs, listen to this. It actually strengthens the structural case for orchestration and observability layers like rail engine, rail tracks, and conductor, rather than weakening the case for Railtown. The main risk is not that an AI bubble stops orchestration adoption entirely, but that it elongates the sales cycles and compresses valuations, while infrastructure, if it happens, overbuild and governance pressure make these layers more non-negotiable over time. In other words, make these layers more important. So you see this over here? Why orchestration becomes more critical. Data center and GPU CapEx are exploding. Hundreds of billions per year being spent on data centers and GPU. Hundreds of billions per year, trillions through 2030, with growing skepticism about return on investment and unit economics. As infrastructure costs and scrutiny rise, enterprises look for governed AI orchestration that can centralize approvals, manage data lineage or lineage, and enforce policies to drive measurable return on investment from sunk CapEx costs. So this is where Railtown, this is the sweet spot of what Railtown offers all these big spenders. Agent native and orchestration centric architecture, workflow automation, AI agents are explicitly called out as growth markets because they reduce service costs and resolution times by executing system actions, not just chat. Well, we're not in a chat investment. But isn't that something? This concern about OpenAI and Microsoft's reliance on OpenAI, etc., actually translates into making frameworks and platforms like Railtowns all the more important. In other words, the more expensive and politically sensitive the underlying compute becomes, the more valuable a thin, vendor-agnostic orchestration and observability layer is to actually monetize the spending that's already happened. And by the way, Railtown is Switzerland, or the way Switzerland used to be. They are vendor agnostic. They are neutral. So how Railtown Stack fits that macro story. Rail Engine, real-time God, let me start again. Rail Engine, real-time event-based ingestion platform feeding AI systems with live data, a prerequisite for autonomous outcome-oriented agents. It's a prerequisite. You can't have autonomous outcome-oriented agents without a similar platform. Railtrack's ADK, Python native agent framework to design, orchestrate, and deploy multi-stage autonomous agents with pre-built integrations and execution track tracing. Conductor, observability for agent behavior, performance, resource utilization, and reasoning paths, giving teams the knobs they need to optimize spend and de-risk production deployments. That stack, which I just read to you, directly targets the enterprise needs highlighted in AI orchestration market forecasts. In other words, governed workflows, auditability, cost visibility, and faster return on investment on AI projects. In a world where infra is both expensive and politically visible, tools to show, quote, what ran, at what cost, with what business outcome, unquote, sit squarely in the value chain rather than on its periphery. So in an AI bubble risk, who actually gets hurt? Analysts are explicitly debating an AI bubble, but much of the concern is around hyperscaler level infrastructure overbuild, opaque special purpose vehicles, and the spend to revenue gap, such as at OpenAI, at frontier model labs. A plausible scenario is an industrial AI bubble where infrastructure is temporarily overbuilt. That can ultimately reduce GPU pricing and lower cost of goods sold for software and orchestration layers sitting above where Railtown is. Historical analog to this situation. I'm not sure this is going to happen, but when the fiber build out happened for .coms, that same backbone, if you can call it that, is what AI is running over, other than the data centers. But anyway, when .com fiber was overbuilt, it hurt early equity holders, but as a remainder, left a cheap, abundant network that latter application layer companies were able to exploit. Translating this to Railtown type platforms, the biggest risk is valuation volatility and funding cyclicality, not that orchestration stops being needed. If anything, enterprises under board scrutiny will be told to, quote, sweat the assets you already bought, unquote, which requires better orchestration, observability, and optimization. Could fear stall adoption of Rail Engine, Railtracks, and Conductor? I asked that question. Where fear bites, budget timing, CFOs may delay new platform rollouts, demand harder rate of return proof, and run more, I don't know what a POC is, point of contest? Proof of concept, maybe. Run more proof of concepts before committing to enterprise-wide deployment. vendor risk, concerns about concentration on any single model provider or infrastructure partner may slow projects that look too tied. My eyesight is tricked a lot, so I apologize. Look too tied to one ecosystem. So where fear actually pulls demand, so fear has a way of increasing demand, is governance and compliance. So regulated industry, BFSI, healthcare, public sector, are leading adopters of AI orchestration because they need audit-ready, policy-enforced workflows. Scrutiny actually amplifies the need for Railtown type platforms. Think that London deal they signed. Cost optimization. As boards question AI infrastructure return on investment, teams will look for platforms that make agents observable, tunable, and cost efficient per transaction. That's Railtown. Where fear actually helps demand, again, is multi-model hedging. Orchestration frameworks that are model agnostic, that's Railtown, give enterprises flexibility if any single foundation model vendor or lab stumbles. So nervousness can slow tourist AI projects, but it tends to favor infrastructure-like software that turns AI from experiments into controlled, governed production systems. So how do you underwrite this as an investor or operator? We'll go through the tick points. Tick number one, underwrite mission criticality. Favor orchestration and observability platforms that sit in the production paths. Incident reduction, revenue processes over nice to have experimentation tools. I think that's the phrase I use, nice to have. So that's where Railtown sits. Two, emphasize clear unit economics. Position Rail Engine tracks conductor around quantifiable metrics. Tickets resolved per GPU hour, revenue per agent run, infrastructure savings per workflow automated. And they already do this. Lean into compliance and governance. Build and market features that support audit logs, RBAC, policy enforcement, and data lineage. These are specifically called out as drivers in the orchestration market, and they already do this. Prepare for longer sales cycles. I don't know about that. They already sold to TELUS. Once TELUS is up and running, it's going to be like a chute of business coming down one pipe. It's not even a pipe. It's like that. It's like those open canals that you see in LA to handle storm runoff. It's just going to be just a flood of business maybe. So their sales cycle really was to TELUS. They may have no further sales cycle. But anyway, they're saying prepare for longer sales cycles, but deeper entrenchment. Enterprise infra layers often sell at a slower pace, but they churn less frequently. So you can design your, I guess GTM is go to market, or I don't know, expecting that profile in a bubble nervous environment. Anyway, so summing all this up, a frothy, nervous AI macro can hurt headline multiples, but such a nervousness generally increases the strategic relevance of orchestration frameworks that make AI deployment safer, cheaper, and more governable. Exactly where Railtown is aiming to sit. I didn't write this. This is Perplexity, and you get 3 pro questions a day, and this is their pro model. So I think we're in the right. Okay, so then whatever question I asked. Yes, there are AI software companies that have gone from roughly 10 millions in value to, I didn't use that word, decacorn plus valuations or large takeouts in very short windows when the company were perceived as critical. See this over here? Critical control point layers. Even if the exact path wasn't literally 50 million in enterprise value to 10 billion. Obviously, you see what I asked. Via M&A or otherwise. Sierra, Cognition, and several others hit or exceeded the $10 billion band in months on the back of being seen as pivotal in AI workflows. While IBM's $11 billion acquisition of Confluent shows how incumbents will pay up for an end-to-end, that's what Railtown is, end-to-end, AI-enabling data and streaming layer that becomes plumbing for agents. So here's some examples of critical layer explosions. Confluent. IBM agreed to buy Confluent for 11 billion enterprise value in order to create a smart data platform which connects processes and governs real-time data as foundational infrastructure for enterprise generative and agentic AI. AI decacorns. In 2025, multiple AI startups, Cognition, Sierra, others, jumped into the 10 billion plus valuation club in months on the thesis that they were core to AI-enabled workflows, such as reasoning, CX, whatever CX is, and data centers, with funding rounds marking 3 to 10x valuation uplifts in fewer than 2 years. Infrastructure and data layer deals. Recent acquisitions by Snowflake, Databricks, Salesforce, and other in data and AI infrastructure underscore a pattern. Buyers are concentrating capital on platforms that make AI-ready data and orchestration reliable at scale. Now this response points out these are not perfect apple to apples comparisons with a $50 million enterprise value starting point, which is where Railtown approximately is. But they demonstrate that once the market decides something is non-optionable, let me start again. Once the market decides something is a non-optional layer in the AI stack, valuation steps can be extremely steep and extremely fast. Once the market decides something is a non-optional layer in the AI stack, steps in valuation can be extremely steep and extremely fast. So next we'll talk about how Railtown's end-to-end layer fits that template. Again, this machine's coming up with the wording. How Railtown's end-to-end layer fits the template. IBM is explicitly justifying $11 billion for Confluent because it provides, Confluent provides a unified end-to-end data streaming and governance layer, quote, purpose-built for AI, unquote, enabling agents and generative workloads across fragmented environments. Railtown positions itself as an end-to-end stack for event ingestion. That's Rail Engine. Agent orchestration, that's Railtracks. And observability governance, that's Conductor, which is conceptually similar to this IBM thing, in that it aims to be the rails and the control plane for agentic AI running over heterogeneous infrastructure and gay infrastructure. They don't, they're okay with gay infrastructure too. If buyers conclude that Railtown is a sovereign, irreplaceable control point for live events, agents, and observability, rather than just another tool like the Turtle Tiger, it fits the same strategic bucket that Confluent and high-end orchestration / observability platforms occupy in the merger and acquisition logic. How long does that take? 2 years, 3 years? We're about to find out. I think it's very quick, but we don't know for sure yet. In that frame, now it's quoting me, your, quote, sovereign moat for proof of vital importance in the stack, unquote, is exactly the story Confluent is being acquired on, just focused more tightly around AI agents than general data streaming. And then obviously I asked this, could a bidding war emerge on hockey stick metrics? If Railtown actually prints the profile you describe, and it explains its interpretation of my profile, revenues inflecting upward like a hockey stick, very high gross margins, and evidence that Railtown's stack is in the critical path of production AI workloads, that is if Railtown prints that profile that way, then a bidding war is plausible. But not guaranteed, not guaranteed. History shows dogfights tend to occur when three conditions line up. When the owners are mean to the dogs, and the owners are not dog lovers. All right, so let's look at that. History shows dogfights tend to occur when three conditions line up. One, strategic necessity. Multiple strategics, that's the big boys and girls, decide this layer, Railtown's platform, becomes a must own to win in the AI space, such as IBM is signaling with Confluent, and as Palo Alto did with observability. Let me look that one up. Palo Alto. Observability in AI clusters. Okay. And we'll look at that later. Via chronosphere. Let me write down chronosphere. Chronosphere. And then number two. So again, dogfights tend to occur when three conditions line up. One, strategic necessity. Two, scarcity. There are very few comparable assets at a similar scale, which is increasingly true in the orchestration and smart data platforms for AI agents. I didn't use the word smart data platform. For AI agents. So again, history shows dogfights tend to occur when three conditions line up: strategic necessity, scarcity, and number three, proof of monetization. Before I read this, what could be better proof than scaling like a mofo on a data center in a sovereign moat in Canada with high multiples? I can't imagine. And monthly income, probably. Proof of monetization. So you want to see average recurring revenue, large and growing quickly. I think that fits what could be the Railtown experience. Chronosphere more than doubling to about 166 million ARR before its strategic acquisition. I've shown you, I think Railtown has a visible path to $1 a share in ARR. I don't know what it worked out in Chronosphere, but that's about 220, 250 million over the next 24 months, 18 months, 32 months. And it doesn't have to be booked, it has to be visible. Cognition doubling its valuation. Let me look up Cognition. I'll write that down. Cognition. Cognition doubling its valuation to 10 billion in months. So buyers can't hand wave it away as hype. Under these conditions, those conditions, strategic necessity, scarcity, and proof of monetization, under these conditions, it is realistic that multiple buyers, clouds, security vendors, data platforms, large integrators, could decide it's faster to buy than to build. And they could move into a competitive auction, especially if they see the asset as a way to lock in their own ecosystem or block competitors. Possible valuation bands in a buyout. Your own prior modeling work already sits in the right ballpark for an infra/agentic platform with 100 million plus in annual recurring revenue and strong growth. 8 to 20x ARR for standard outcomes, reaching 25 to 35 times annual recurring revenue in top tier orchestration control point scenarios. Recent market data supports those kind of bands. I ran this I think this morning. So, one, high growth AI infra and other orchestration adjacent assets are clearing at premium revenue multiples versus generic SaaS, often well north of 15 times ARR, with outliers in the 25 to 50x territory when there is clear category leadership or strategic necessity. 2, IBM is paying 11 billion smackers for Confluent with an explicit AI data platform thesis, while precise ARR isn't even in the press release. But sector commentary pegs Kafka, I don't know what Kafka is, data streaming leaders at elevated ARR multiples, giving their role in feeding AI. That might be a company, so I'll try to look that up, Kafka. What was his name? Gregor woke up as a cockroach. All right. So if Railtown were to reach 100 million in annual recurring revenue in the next few years, I think it could reach that projectability in the next few weeks after the data center is truly opened for business in a big way. I don't think there's any few years about it. But again, it's projectability, not actual booking, with high margins and clear evidence of being a control layer for real-world agents. This is a big positive that Railtown has over competitors, if they are true competitors, because by scaling rapidly on top of the massive elephant of a data center, this 100 million could happen in very quickly. So if they do that, they have high margins and they're a control layer for real world agents. That's Rail Engine. And If Railtown's platform is seen as scarce, which I think the IP, everything I read is, even with big monies, everything takes years in this space. It's not like you can put a team together and Manhattan project something in a month. So if Railtown's platform can be seen as scarce and hard to replicate at speed by several strategic buyers, then multi-billion-dollar enterprise value outcomes are within the realm of market consistent scenarios, with the upper end, high single-digit to low double-digit billions being possible. So these scenarios, these situations might require Railtown to be viewed in a similar fashion to the most prized AI infra and data layer platforms rather than as a nice-to-have tool. I think I used that phrase. In that context, going from a sub $100 million enterprise value starting point to several billion on a sale is absolutely possible. Reaching 10 billion quickly would demand both extraordinary execution on your hockey stick 100% margin, that's my quote, narrative, that was my supposition, and an IBM Confluent style consensus that Railtown is the indispensable layer wiring AI agents into real-time data and production systems. And I'm positing to you that this might exactly be where Railtown is. It's speculative. We don't know. A hyperscaler absolutely can throw money and engineers at this layer, but history and current data both say that does not eliminate the opportunity for independent orchestration platforms. That's what Railtown is. It just shapes where the independents win and how concentrated the upside is. The arms race you are describing is real at the infra level, but a few years of build-out risk mainly affects who gets the premium multiples and how many players matter, not whether there is room for Railtown type platforms at all. Somebody's going to get it. Can hyperscalers eclipse an early mover? That's a question I asked. Hyperscalers already build lots of native orchestration, Azure ML, AWS Bedrock / step functions, GCP Vertex, internal agent platforms, for example, and they will keep doing so. However, independent, quote, intelligence / control planes, unquote, have repeatedly survived and thrived in similar conditions. For example, third-party networking control planes like Avatrix versus AWS GCP native tools. I guess we got to look up Aviatrix. because they span multi-cloud, on-premises, and sovereign environments where hyperscaler tools are either weak or strategically unattractive. So Railtown does span multi-clouds. It's also vertical on-premises, and it also can be limited to sovereign environments. Hyperscalers tend to optimize for lock-in and their own stack. Enterprises increasingly want abstraction, portability, and consistent controls across clouds and sovereign edge deployments, which is exactly where third-party platforms wedge in. So yes, a hyperscaler could clone features and blunt some of Railtown's early mover advantage, but it cannot easily neutralize a truly cross-cloud, sovereign-aware control plane unless it buys Railtown or is willing to, or somebody like Railtown, or is willing to help customers de-risk over multi-clouds in a way that it cuts against the hyperscalers' own incentives. Remember, Google's building everything inside Google. Why would they make it easy to go use AWS or go use Microsoft? I asked this question, obviously. How big is the addressable market? Data center orchestration broadly is projected at $25 billion by 2030. I'm going to write that down. Data center orchestration, 30 billion by 2030. Amazing. With high teens to 20% CAGRs, driven by AI, hybrid cloud, and edge build-out, driven by AI. How deep is your love, your love? How deep is your love? I've got to know. So 1, 2, 3, 4. Okay. Railtown is 2611. That's the bid. 60,000 on the bid. The ask is 2708, 2707. They keep trying to show you there's a lot for sale. I'm sure there isn't. The volume is 55,047. Finger is up 21 cents to $1.48. GDC is down 14 cents at $4.06. Well, $4.07. MTEN is up almost 8 cents at 212 almost. ZJYL is up about very small movement. It's up to 0.1399. The overall market is Dow is up 500, NASDAQ up 200, S&P up 50. And there we go. All right, let's see where we are here. All right. How big is the addressable market? How big is your love? Data center orchestration broadly projected by 25 billion by 2030. Railtown doesn't have to get that much of that market, data center orchestration. It's weird. They set a higher number up higher than that. But anyway, I wrote them both down. Dedicated AI orchestration, agents, data orchestration, agent builders, model serving is projected to be 30 billion. All right, so dedicated AI. Dedicated AI, which applies to Railtown. As enterprises move from chat pilots to production workflows. At the infra level, global AI data center power capacity alone is expected to triple by 2030 in the United States, confusing sentence, and be replicated in national programs, which implies a massive, geographically distributed orchestration surface, not just 3 clouds. That total asset market is big enough for multiple orchestration winners. Hyperscaler native, sovereign, industry specific, and across horizontal cross-cloud platforms. But it's not infinite. Power law dynamics will still concentrate the bulk of value in a handful of names. So another question I asked, will many solutions all become valuable? In adjacent markets, cloud networking, security, observability, you get a long tail of vendors, but only a few with truly outsized enterprise value. Most others are niche or eventual consolidation targets. The AI orchestration forecast points to consolidation around platforms that can span multiple systems, provide strong approvals and evidence, and support distributed sovereign deployments with consistent policy and telemetry. That suggests 3 tiers of value. A tiny set of global control plane leaders. Could Railtown end up there? A set of regional vertical players that are strong M&A candidates. I think that's where Railtown currently definitely sits. And a long tail of tools that never accumulate strategic weight. That's a possibility, but I think we're already in the middle on the way to the top, but we'll find out. So there is room for many providers, but only those that become clear control points, data, agents, policy, evidence. Across environments, only those will achieve the very high multiples and decacorn type valuations you are modeling for Railtown. Well, I was asking them, but I guess they say I'm doing it. Okay. How does a few years of build out create risk? That was a question. The risk from a longer build out cycle is not that the arms race disappears. I guess that was my question. It's that one, hyperscalers harden their native offerings, making it harder for a third party to insert as the default control plane inside a single cloud. Okay. 2, enterprises may default to a hyperscaler tool for their first wave deployments, then only bring in third-party platforms later for multi-cloud, sovereign, or government's needs, which pushes out the hockey stick timeline and shifts where in the stack Railtown is seen as critical. And then number three, the market narrative might tilt from, quote, everyone needs an external orchestrator now, unquote, to, quote, most workloads can run on native tools plus a few specialized external platforms, unquote, which caps how many big winners you get and puts more weight on differentiation. In other words, a few years doesn't kill the opportunity. It gives the big guys time to occupy easy ground and forces Railtown to win the hard ground, which I think might be shown once it's in TELUS. So Railtown has to win the hard ground. In other words, multi-cloud, sovereign, edge, co-location, national AI buildouts. That's where Railtown is. And regulated environments where neutral control planes are preferred. I think they're already there, but they have to prove it. Is there really an arms race among the Mag 7+2? I asked that. Yes. At the infra and foundation model layers, there is intense competition. Hyperscalers are investing at unprecedented levels in GPUs, power, and AI-ready campuses, with AI now the primary growth engine for data centers, and it's projected to triple US AI data center capacity by 2030. That's only 4 years away. National programs like Humane and other sovereign AI efforts are creating a second arms race where countries and funds pair with chip vendors and clouds to build their own AI infra and data center fleets. As agentic AI decentralizes where compute lives, on-premise, sovereign cloud, specialized GPU providers, co-locators, third-party orchestration layers become more important. Because hyperscaler only approaches simply do not cover the full topology. So you're right. Really? I'm right? So you're right. There is an arms race, but it has two levels: hyperscalers and national sovereign infra at the bottom, and control planes and orchestrators at the top that can span the increasingly fragmented landscape. If Railtown wants to turn an early mover advantage into a durable, non-eclipsable position in that race, the levers are: 1, be genuinely multi-environment. Hyperscaler, sovereign, plus co-location, edge. Not an Azure only nice to have. They're already there. They are multi-environment. 2, make observability, approvals, and evidence first class. Apparently they're already there, but we'll find out. I.e. the thing boards and regulators depend on. So ripping it out is painful, regardless of what the hyperscalers pitch is and what they ship. 3, land quickly in at least one high stakes segment. 3, land quickly in at least one high stakes segment. Isn't that the Thales data center inside of the Canadian sovereign strategy? Land quickly in at least one high-stakes segment, national AI infra, highly regulated verticals, or global system integrator stacks, where being the neutral layer is a strategic requirement. Doesn't this describe Railtown, the opportunity ahead? If Railtown wants to turn early mover advantage, all right, I just read all that. So summarizing down here, that posture reconciles your intuition. In other words, the arms race is real. The total addressable market is enormous. Hyperscalers will absolutely try to eat this layer, but there is clear historical and current precedence for independent orchestration / control planes to become both essential and extremely valuable if they own the quote unquote glue across an increasingly fragmented AI infrastructure world. All right, let me take a break because I'm tired of reading and go back to your comments. Ward Richardson, the main engine man. He's the main engine man. 2611 to 2709, 55,000 shares. Huh. It's not coming up. There we go. Good afternoon, William and RT Kroon. I see RT has another sale on today. Stock up while you can. It's not much of a sale. Slightly up, but the cash register is open for business. T. Alex, buy when no one cares. Buy when no one else is buying. Planeteer, $9 to $10 to $200. Wow. Hey, what is that right? I don't know much about Planeteer, but that's a hell of a thing. It's a hell of a thing. Killing a man. You take away everything he's had and everything he's gonna have. That same pitiful 52,500 is now for sale at 27.52. Ward Richardson, William. When IBM bought Confluent, that was a huge strategic move for IBM. Yeah, makes sense to me. Joe Marty. Joe Marty. Marty Party. Grab 2,000 more. That's fantastic. That's a huge number. I'm yellows. I'm yellows. 194,930. Congratulations. And D-Wave. This is an important point, Ward says. Railtown software will be huge in the quantum industry. By the way, the sale is still on. Buy all you can. I think that's right. All right, let me keep going on my rounds today. Okay. You can see the questions I asked. Yes, strong early IP can make a material difference for Railtown, especially if most of the eventual value creation happens inside a behemoth like Microsoft, that was my word, after an acquisition, not in the standalone microcap phase. Railtown already has multiple provisional and now non-provisional patent filings around its AI-driven dev tools and, quote, application general intelligence, unquote, concepts, which is exactly the kind of proprietary foundation that can amplify value once plugged into a hyperscaler distribution machine. The impact of strong early IP. Railtown has filed at least 2 North American provisional patents, one now advanced to a full application, on AI-driven ticket generation and co-pilots for enhanced access to DevOps knowledge. Positioning Railtown's platform as a virtual developer. That sounds pretty big to me. That automates core engineering tasks. This IP underpins Railtown's application general intelligence platform, which integrates with Azure, DevOps, Jira, Notion, Google Docs, and more. And it's and is already accessible via Microsoft's Azure Marketplace. Wow. For a strategic buyer, this kind of early focused IP can be both a defensive shield, harder for others to copy, and an offensive lever, licensing, bundling, internal reuse across product lines, which materially increase the inside the acquirer value growth potential. So, the stronger and more differentiated Railtown's IP portfolio is around event ingestion, agent orchestration, and dev workflow automation, the more it supports a thesis that Railtown's platform is not just a feature, but is a defendable layer. Decacorn type growth inside a behemoth. Microsoft now operates 400 plus data centers across 70 regions and is investing tens of billions annually into AI optimized infrastructure and sovereign clouds. When giants buy IP-rich platforms, a lot of the valuation expansion happens post-acquisition. The acquirer spreads the technology across its entire footprint, such as Global Foundries integrating Synopsys ARC processor into MIPS. Do I have to write that all down? I guess I do. All right, Global Foundries integrated synopsis. Synopsis ARC. No, synopsis ARC. All right. Into MIPS to accelerate AI workloads across Global Foundries customer base. In your scenario, if Microsoft bought Railtown at a high but still micro cap to mid cap price, then made Rail Engine Railtrax Conductor a mandatory or default bundle across Azure DevOps, GitHub adjacent tooling, and Azure regions, the internal value creation could be an order of magnitude higher than what Railtown could reach alone. And this argues both ways, why Railtown would sell and why Microsoft would buy. In that kind of deal, Deca growth is absolutely plausible, but most of it accrues to Microsoft shareholders, with Railtown holders capturing a slice via the acquisition price and any competitive tension in the auction. You can see the nature of my questions. Mandatory bundling across 400 data centers. Microsoft explicitly frames its 400 plus global data centers and new AI superfactory campuses as a unified platform, tied together by AI optimized WAN and customer silicon to deliver planet scale AI services. Hyperscalers routinely turn acquired capabilities into mandatory or default components. They bundle acquired IP into platform SKUs, partner programs, and reference architectures, dramatically increasing usage and making that layer both boring and indispensable. If Railtown Stack became the standard AI dev productivity and orchestration layer inside Azure, and perhaps GitHub and DevOps bundles, it could quickly touch a large share of Microsoft's global enterprise developer base and 400 data center footprint. Growth that Railtown alone could never fund. See that? They could never fund it. This is precisely why acquirers pay strategic premiums for IP-rich early mover platforms. They are buying not just the current annual recurring revenue, but the ability to turn that intellectual property into a ubiquitous feature across a massive installed base. Okay, so then I talked about risk to reward. How this affects Railtown's risk to reward. Using your pro lens, pro for the Railtown holders. Strong IP plus early market position in agentic orchestration, proven integrations with Azure-centric tools, and a clear path to embedding into hyperscaler workflows increases the probability that a giant prefers to buy rather than build, especially if time to market is critical. Pro, for the acquirer, they can pay a high multiple relative to Railtown's standalone enterprise value and still come out ahead by turning it, Railtown's platform, into a default capability across a 400 data center global developer base where incremental distribution cost is nearly zero. Risk. The more obvious that play is, the earlier a hyperscaler may move before Railtown fully proves out the deca scale economics on its own. So a large portion of the deca growth could be realized inside Microsoft rather than in Railtown's public curve. Public valuation curve. So the net is yes, Railtown's early and strengthening IP can make a huge difference, both in its standalone defensibility and in how valuable Railtown is as a strategic acquisition. A Microsoft-style buyer could plausibly create decacorn equivalent value from Railtown's technology simply by bundling Railtown's technology across 400 data centers and global developer offers. The key question for you is how much of that value you want to capture directly via public market upside versus indirectly via strategic takeout at a premium. Well, I'm not the CEO. If several hyperscalers and majors all simultaneously concluded Railtown was a must-own control point, then yes, deca-billion plus bids could look cheap to them relative to the value they can unlock internally. The ceiling on a bidding war is determined far more by each bidder's internal valuation than by Railtown's pre-deal market cap. Do you see that? How multiple strategic bidders change the ceiling. When you go from, quote, only Microsoft cares to, quote, Microsoft, AWS, Google, plus maybe NVIDIA, and one or two others all care, a few things change. Each bidder models what this does inside our debt stack over a 5 to 10 year period, not what multiple am I paying on Railtown's current ARR. The strategic value includes accelerated time to market, higher attach rates for core cloud GPU services, reduced churn, differentiated AI offerings for developers, and preventing a rival from owning that control point. If the same asset is a control plane accelerant for Azure, for AWS Bedrock, for Google Cloud's AI Suite, and for NVIDIA's Enterprise AI Stack, each will see a very large internal net present value. And the minimum each strategic bidder is willing to bid can already be in the multi-billion-dollar range, even when Railtown is still small on paper. That's why you see small or loss-making assets clearing at what look like crazy prices. The value is in what they become inside the acquirer, not what they are standalone. The value is what the acquirer perceives it can be inside of the acquirer. Why decabillions can still be cheap for them. Think in their terms, not in Railtown's terms. A hyperscaler with hundreds of billions in market cap and tens of billions in annual AI-linked revenue only needs a modest uplift extra share of workloads, higher GPU utilization, better lock-in, lower churn. A hyperscaler only needs a modest uplift for a $10 to $30 billion price to be rational. They came up with that. I might have asked a range. If a neutral agent orchestration layer can drive even 1 to 2% incremental share of a $1 trillion plus long run AI/cloud/GPU profit pool, that's tens of billions in value for each player. For NVIDIA, a control layer that makes it easier to deploy high-margin DPU-dense AI workloads across on-premises, co-location, and cloud partners could be a way to defend and grow its position beyond the chip into the brains of deployment. From that vantage point, a $10 billion check can genuinely be seen as cheap insurance or table stakes to avoid letting a rival own the layer that routes and optimizes agentic workloads. Could bidding reach 10, 20, 30 B plus? I might have asked that question. I think I did. In a thought experiment where Railtown is widely deployed and clearly proven as the de facto agent orchestration and observability layer across multiple environments, cloud and tool and colo, and several giants all believe that A, they need that capability urgently, and B, they would be at a structural disadvantage if a rival bought it. All right, relax, everyone. I have to go find it for this scintillating tale of all right, we're 2611, 61,480. Okay, that's what we started with the thought experiment. So basically, Railtown is scene critical, and several giants all believe they need it. Then yes, the game theory can push bids far beyond any fair standalone discounted cash flow model. The key ingredients for a $10 to $30 billion outcome would be one, control point perception. Everyone agrees this is the canonical way enterprises build and run agents on real-time data. Two, multi-ecosystem importance. The tech plugs into or could plug into each bidder's ecosystem in a way that meaningfully shifts their competitive position. Or three, no easy substitute. The IP, product maturity, integrations, and ecosystem around are the IP, et cetera, and ecosystem around Railtown are far enough ahead that to just throw engineer at it as a competing solution is too slow or too risky. Under those conditions, the relevant question isn't, in their board's mind, isn't, quote, are we really paying 100x ARR? But instead, quote, do we accept being structurally behind if someone else owns this, unquote. That's how you get to numbers that look wild from the microcap starting point, but rational from the hyperscaler's internal modeling. So in your scenario, many majors all seeing the same potential. Decabillion plus bids are conceptually plausible. Whether you ever get there depends on Railtown actually proving it is the irreplaceable agent controlled layer before any one buyer can commoditize the category or convince themselves that they can build a close substitute in time. So there are risks. If Railtown is truly the critical control layer inside Telus's sovereign AI factory, then yes, your scenario could move it very quickly toward must-have, must-own territory for the larger players, because it would be de-risking the exact use case everyone else is scrambling to prove. Why a TELUS sovereign win matters so much. This is my point. I think everything comes down to TELUS. TELUS's sovereign AI factory is flagged as a flagship, fully Canadian controlled, NVIDIA and HPE accelerated platform for training, fine-tuning, and deploying AI models under strict sovereignty constraints, with expansion to multiple sites. Rimouski now, Rimouski forever. Rimouski now, Kamloops next. This is exactly the kind of high visibility reference that other telcos and national programs watch. If Railtown is the orchestration layer sitting on top of that stack, routing events, powering agent workflows, and giving observability governance over workloads. It becomes the proof point that a neutral application level control plane is essential in sovereign AI settings. Entwistle's type of revenue ambition, I mentioned 2 billion, means TELUS would be highly motivated to push productized, repeatable offers to thousands of small and medium enterprises and public sector clients. If Railtown is wired into these offers and participates economically, that is exactly the kind of, quote, many logos, real usage, serious dollars, unquote, story that changes how strategics perceive the story. I gave those number parameters. If hundreds of thousands or 10,000 small, medium enterprises come into TELUS's sovereign AI platform, is effectively Railtown mediated, then 3 things happen at once. 1, Railtown gets a large, diverse cohort of real production tenants generating telemetry, case studies, and references. 2, it becomes much harder for competitors to argue that Railtown is just a tool rather than infrastructure. Railtown would now be embedded in the fabric of how a telco monetizes its sovereign compute. 3, other telcos, governments, and hyperscalers see a working template. Sovereign AI factory plus GPU infra plus local models plus an orchestration agent layer that has already learned most of its operational lessons. That's when FOMO, the mofo, cuts in. That's when fear of missing out kicks in. In that situation, Railtown Signal is not, quote, nice dev tool with some IP, unquote, but, quote, the operating layer that made the first major sovereign factory actually work commercially, unquote. Can you hear that? What if Railtown Signal is, quote, the operating layer that made the first major sovereign factory actually work commercially? For the clouds, NVIDIA, maybe a data platform, we'll use already served production the TELUS grade reference at scale to I don't know what went wrong. I really don't. Something with my setup. All right, so two, if sovereign customers and SMEs are used to building on top of this layer, ripping it out or replacing it becomes non-trivial. This is precisely the kind of stickiness that defines control plane assets. There's one missing here. So how do I find it? Let me see if I can find it. 601, okay. 601 looks like that. All right, so it looks like that one. Oh, shoot. Let me try this one. I'm missing one of the pages. All right, and now I know where I go. That's the one I just read. Okay. So that's the one I just read. That's weird. I might just be missing a page. So let's see what it is. Yeah, I guess so. They just skipped a number. So it de-risks the technology, clarifies the control point role, and 3, creates competitive fear. If one hyperscaler or an infra giant pairs that orchestration layer with their own stack, they gain a differentiated story for governments and regulated customers. The others are forced to decide whether they're comfortable being behind. Once multiple majors line up that way, they are no longer thinking in micro-cap terms. They're comparing the purchase price to the lifetime value of owning the sovereign enterprise agent layer across many factories and regions. This is where decabillions starts to look reasonable to them, even though it's shocking relative to where Railtown trades today. The big if, of course. There has to be an if. The hinge is on your opening clause. If Railtown is the critical layer, and we don't know that, it has to be visibly indispensable, i.e., it's the thing that lets TELUS offer a full governed AI lifecycle and SME-friendly products, not just a peripheral add-on. It has to share in the economics enough that its revenue and margins reflect that centrality, not just a small SaaS fee bolted on to a giant infra contract. It has to look replicable. Other telcos, sovereign programs, and large enterprises must be able to look at the TELUS blueprint and say, quote, we want that. We should either adopt or acquire this layer rather than reinvent it from scratch. If those conditions hold, then yes, a sovereign AI win of the kind you're describing could be exactly what vaults Railtown from an interesting small cap into the must-have, must-own conversation for big acquirers who are trying to win the post-hyperscaler phase of the AI stack. All right, now I said I want you to tell me what is the risk other than zero, because I don't think zero is happening here. On your low end but good outcome assumptions, Railtown in other words, Railtown as a solid revenue sharing software layer on a multi-billion sovereign data center stream, but not seen as a must-have global control point. The valuation logic collapses back toward normal, strong SaaS infra-adjacent multiples rather than deca control point numbers. So you've effectively assumed Railtown is I didn't, but they're telling me what I did. Railtown is embedded as a key enabling layer in a very large AI data center revenue stream. Fair enough. That Railtown participates in that revenue. Fair enough. It has good growth and high margins. Fair enough. But strategic buyers see it as desirable at the right price, not existential, i.e. they could assemble a substitute given time. They're not terrified of a rival owning it. I'm trying to define a downside here. In that world, buyers would benchmark more against a SaaS vertical infrastructure valuation than against a must-own control plane outlier. So, a reality check. Check SaaS. Across recent data, private business-to-business SaaS and IT product companies with good growth and retention typically transact at 3.5 to 7 times revenue in mid-market deals. High quality, high growth business to business SaaS in 24 to 26 can command 6 to 10 times ARR. Larger, stronger software deals, 100 million, 500 million, cluster around 5 to 7x enterprise value over revenue. So if Railtown is a good, profitable, important, but not irreplaceable, the natural base case is something like 4 to 8 times revenue, scaled by how big and how de-risked that revenue has become. Translating it. To keep it concrete, suppose under your telesovereign factory scenario, Railtown's own ARR lands in one of these zones without the must-own status, 25 million, 50 million, or 100 million. And there's the multiple band. It would imply at 25 million an enterprise value of 100 to 175 million dollars. This is if it's not indispensable. At 50 million, it would imply an enterprise value at 200 to 350 million. At 100 million, it would imply 400 million to 800 million. These are not DECA numbers. These are strong vertical infrastructure SaaS outcomes attached to a much larger ecosystem revenue stream. They reflect solid unit economics and growth, clear strategic relevance to one or a few big data center programs, but no consensus that Railtown is the unique global control plane that someone must own at any price. If there is some strategic heat, two bidders or a buyer wanting to accelerate a roadmap to build, you can stretch these multiples toward the upper end of high quality SaaS, 8 to 10x ARR. So that still puts a company with 50 to 100 million in ARR in the low to mid single digit billions enterprise value at the upper edge, not deca billions. The trap is big underlying infra or data center revenue doesn't automatically hand the software layer a right to those billions in valuations. If Railtown is perceived as replaceable or rebuildable as a component, the buyer values Railtown's actual economics, ARR, margins, growth, plus a modest strategic premium, not the full net present value of the data center's revenue. Control point stories, Kafka, Confluent, or the DECA AI infra deals are where the market starts to pay attention to the underlying flow, because that layer is seen as the gatekeeper or abstraction. Your, quote, just a good thing version explicitly removes that control point, removes the must-own status. So it pulls Railtown back into the standard software as a service valuation gravity well. So even if TELUS hits 2 billion on the factory and Railtown rides alongside, if strategics thinks, quote, we could re-platform this over 2 or 3 years if we had to, unquote, they are unlikely to pay valuations that are a large multiple of Railtown's revenue. So let's answer your question directly. So if you assume Railtown is proven, embedded, and revenue sharing on a multi-billion-dollar sovereign AI data stream, but it's not yet widely regarded as non-substitutable global control plane, so it's good, but it's not seen as a non-substitutable global control plane, more as a strong strategic partner than the key to AI policy, then a reasonable low-end EV valuation in a sale to a rational strategic would likely sit in the range of 4 to 8 times its own ARR, maybe nudging to 8 to 10 times if growth margins and retention are excellent, and there's a little bit of an auction. That means at the low end of outcomes under your scenario, but without the must-have status, it's hundreds of millions to low single billions, depending almost entirely on the revenue level of Railtown in actuality. So with 100 million in visible growing ARR and 210 million fully diluted shares, the low to mid valuation band, assuming Railtown is strong, but not must own control point. The band clusters in the mid single digit billions with upside toward high single digit billions if growth and margins are exceptional. So I asked them to apply it. For 2026, good quality SaaS and infra software with 100 million in revenue typically trades at 5 to 8x for solid growth and profitability. Premier 8 to 12 if the growth is 40% and the margins are strong and retention is strong. So, which I think is where we are. The base brand would give you $500 million to 0.8 billion. The premium brand gives you 0.8 billion to 1.2 billion, which is LangChain's value. However, if it's not generic software as a solution, it's a layer on top of a multi-billion-dollar AI data system, and it is strategic to one or more players with high margin, that would justify shifting the practical band up a notch without going into must-own decacorn territory. Strategic but replaceable layer is 10 to 20x ARR. Okay, so I have to go get the next. One. I have to go get the next one. I'm totally confused where it is. I think here it is. Let's see. Maybe. That justifies shifting the practical band up a notch without going into the must-own decacorn territory. Strategic but replaceable layer band, 10 to 20x. On 100 million, it'd give you $1 billion, $1.5 billion, and $2 billion. This is a reasonable low to mid strategic outcome if multiple buyers see Railtown as a good accelerator, but not irreplaceable. And then I do the math. So using 210, 476, 714, and 952 a share. If you want to be ultra conservative, no heat, one buyer, fair deal, 333 a share at a minimum to 476. Are you starting to see what I'm trying to point out to you? You're paying 26 cents for a stock that in this kind of modest outcome, I'm not assuming a bust. I don't think that's happening because they have the deal with TELUS. But what if it's just a so-so? 333 a share. According to this computer-generated model. I didn't create it. So here's a compact markdown chart. Interpretation for your good thing, but not a must-have. Low end, 330 to 480 a share. Here, I'll show it to you here. Low end, 330 to 480 a share, reasonable strategic range, 480 to 950 a share, control point, heat territory. It gets it up. They didn't put it here. It gets it to 2 billion, 3 billion. But I'll show you the chart. So it gets you up right here into the $11, $14 range. This is without the must-own bidding war. And I think this is your range of buyouts that you could see, my opinion, in the before June 1. You're paying 29 cents. Now at 29 cents, the stock is, if the market's really predicting something, the market's predicting that Railtown is going to be blown out of the water, that competitors are going to come out and destroy its revenue model, and that it sucks. This stack of outcomes here assumes Railtown is one of many good strategic fits, and there at the top is 330. So that kind of, I think, gives you a downside target that's considerably up from here, and an upside target that's massive if you buy in, if it proves that it's a valuable layer that no one else has. Railtown right now is 2611.0041. Fingers up 15 at 142. GDC is 403, down 18 cents. MTEN is 212, up 8 cents. ZJYL is up, I guess, a penny at 0.1398. Let me just see what else was here. I don't really want to get into that today. Do I want to get into that today? No, I don't want to get into that today. All right, so I did my work. Today. It looks like no more comments. So Ward Richards says, RT software will be huge in the quantum industry. By the way, the sale is still on. Buy all you can. Crabby Ellie says, William, I watched a clip where this person thinks that the drop in silver was orchestrated. Yeah, it's a flash crash. It's definitely a flash crash. It's totally orchestrated and done on purpose. Do you think? Yes, it's totally true. They can sell in 15 minutes using the paper markets. They can sell a year or 2 years worth of production and destroy the price. Absolutely. And you know what? The plunge protection team and the banks can all join in on it. Yeah, that's what happens. When it's going to break apart is when they lose control. But that'll also mean the end of our financial system. That'll mean the end of banks here. So they're going to keep, the battle is going to be a battle royale. Akira Nova, good day, everyone. E. Belanger, sound issue. Yeah, I think there was one, but I don't think there is anymore. Let me look. Hello, hello? No. It does, it shows that it's working. Neil Gondik, afternoon Bill and RT investors. Warrant expiry Friday the 6th, so next week should be good to continue uptrend. Neil makes a very good point. There is this block of warrants that must be exercised by the 6th. So if you're an investor, let's say you own 1 million shares, I'm making it up, but if you own 1 million shares and you have warrants for 500,000 shares, and those are trading, the warrant strike price is below the market, and you don't have any money, you don't have, let's say, $350,000. You have no choice. It's just a calculation. You have 1 million shares. If you let the warrants expire, you'll have 1 million shares. If you sell enough shares to exercise the warrants, you might end up with 1.2 or 1.3 million shares. The company ends up with capital, of course, but Neil's right. There might be selling to fund the purchase of those warrants. It's a very good point. Before the Friday close. William, back into your research saying the operating layer that made the first major sovereign factory actually work commercially. I like the sound of that. And I'm sure Jensen likes that too. Wow. It did say if it's the operating layer that makes the first major sovereign factory actually work, Jensen would like that. You're right. It would make that business model using NVIDIA chips all that more important. Adelep. Now, this guy's coming in here to get you to sell. Please don't listen to him. Forget about 40. I'd be happy getting $40. I'd be happy getting 40 cents. I think he owns 1,800 shares, if I remember. He's just a day trader. Don't think that way. Please, this guy has different goals than you have. His goal is every day trying to print a win because he's leveraged. He might be using other people's money. This is not what Railtown is. I mean, you can do it that way, but you're going to be kicking yourself later on, in my judgment. All right, so now I've got to make it through. I've got to make it through 10 minutes. I have nothing else to say. Yes, Ward. I think that point is very important for NVIDIA, isn't it? Let's see if anything's happening in the war world. I hope not. I hope they're just writing about the Grammys. And I never liked Nancy Mace. All right, so there's nothing there. CBS News contributor looked to be in trouble. Epstein was set to cooperate as his lawyers huddled with feds weeks before his final goodbye. Djokovic lost, broke my heart, but he was valiant. He was valiant. Uh-oh. This is scary. I think he's right. Ron DeSantis issues warning. Republicans cannot dismiss the shocking election results in Texas. I know. That's what it's going to be a nightmare the next 2 years of Trump's administration. They're going to have subpoena power and they're going to suppress everything. It's just going to be a nightmare. But hey, it's good to be in a woke country. Sing. Yeah, I'm not going to sing. I'm not going to sing. I will, for those of you, I'm not going to go into it. I'm going to keep my strategy into phone calls. But for those of you in the gold company, I think it's time, rather than waiting, to get proactive. And there's a handful of you that have emailed me, 5 or 6. I'll try to call you. The rest, I guess, if you don't contact me, I guess I won't call it, or I don't know. I'll play it by ear. But I don't want to talk about it out loud. But we are going to get aggressive and make that work. I guess OpenAI is in trouble. Alamis Gold. Alamis Gold CEO, I've sent the story to. I've got to follow up. I do it so unprofessionally. I use these decks that aren't, I don't know how to fix them, make them, but I got to follow up with him. Colby Cormer. Okay, Colby. Do I have your email, right? Let me write it down. Yeah, I'll follow up. I'm looking, if there's just if there's just 6 of us that can start, then I know what to do, and I can make it a campaign. And while we wait or not wait, if you're broadly hearing this exercise I went through with you today on Railtown, I'm basically saying that by buying the stock or owning it or holding it, it's all suppressed. So your gut is telling you, oh, there's something wrong. I can't believe they have a LinkedIn connection on their website and it goes to an empty LinkedIn page. I mean, these are just fear, uncertainty, and doubt. These are attacks. So those people can make $1,000 today. That's why I get so upset. I know it's probably not pleasant to hear, but it is why I get so upset. They're just thieves. They're just disgusting thieves. But I tried to, broadly, there's three things that can happen with Railtown. One is it sucks and it doesn't measure up. It goes the way of the Betamax. It goes the way of AOL email. You've got mail. Or it goes the way of Hewlett Packard after Carly, Fiona, Maria took over, or the way of Yahoo after the chick took over, or the way of Disney after the chick took over, or the way of Marvel and Star Wars went after the chick took over, or the way of GM after the chick took over. Of course, there are men that screw things up, like DeLorean and but anyway, so let's not make it sexual. But I do think you have to make it, when you promote people, you put the thumb on the scale of people who haven't proven. They just happen to be dickless. You put them up there, and then you want it all to work out. It's crazy. But anyway, one scenario is the Railtown just craters, go to zero. The 26 cents price is telling you something's wrong. It's all bad. Ward sucks. Not Ward. Corey sucks. Marwan sucks. They're liars. They can't get anything done. Those people over at AIP are good, but they couldn't close the deal on time. But they did finally get it done. But it's all just a big hodgepodge of incompetence, being too late, Lang chains ahead of them. The addressable market is tiny. Is just like GTII or CRTD. That's one scenario. I think that's nothing's completely impossible, but it's as close to impossible as can be. Why? Because we know, although we haven't the full details, we know from 2 press releases and from an interview that Rebecca Kurzweil expertly handled, and from some presentations now a little bit older, 3-4 months ago, that in fact there is a link to the TELUS data center for Railtown. We don't know, is it exclusive, what percentage? We don't, there's a lot of broad brush, we don't know. But you can, like I've shown you, you can risk it a bit. I came up with over $1 a share. You can, if you call it 25 cents a share in annual recurring revenue. That means in the first year, when it's up and running, the company is going to earn more in cash than you're paying per share for stock. I just don't see the blow up, worthless scenario eventualizing. The second scenario is that Railtown does have this great position on top of TELUS data center in a vibrant Canadian market, but it is Canada after all. And, Lang Chain is leaping ahead with 300 Fortune 500 companies. And, so Railtown's got a good gig going, but it's kind of, it's just one of many. And it's kind of it's a growing revenue story inside of a Canadian ecosystem. So sounds good. It's a Lexus compared to a Mercedes compared to a Volkswagen market share is going to be good, but it's not a unicorn or a revolutionary must-have. Well, I just showed you in that case, the numbers range from $3 to as high as $7 or $8. $9 is what I recall. So that broad range, sort of 3 to 9, let's say, that's kind of your downside. If you take the midpoint, $6, that's 20 times where the stock's trading today. That's your downside in Railtown. Now, while you buy it for that value, which is just a reasonable cash flowing, high margin, growing company, while you buy it for that, what's possible is Railtown is in fact first to market, best in class. They do have intellectual property that's ahead of everyone else and defensible. They started 6 years ago. And if you listen to Corey's videos, they talked with Microsoft. Why would they keep going if Microsoft already had it or intended to have it? They're partnered with Microsoft. They're in the NVIDIA stack. There's these other players that might want to buy. If in fact Railtown is the state-of-the-art breakthrough orchestration framework that makes that TELUS data center and the NVIDIA theme and TELUS's theme model work, that's one data center, one country. You could extrapolate worldwide. Start with Microsoft. They're a partner with Microsoft. The data did it for you. I think it's wacko after I talked to Corey, but if Microsoft paid $40 billion for Railtown with stock, Microsoft could justify bundling that across its entire software developer captured audience, and even with low multiples, turn that into a $400 billion asset or $1 trillion asset. Well, that would be hard, wouldn't it? It would be many steps, but they could turn it into a $500 billion. Anyway, so while I don't think zero happens. I don't think crap out happens. While you're waiting for it just to get to a boring SaaS multiple, you could be surprised and see that it goes to a confluent multiple. And what is a confluent multiple? That's $11 billion. $52 a share, which, my target, $55, $52 a share. So that's what I'm trying to give you. Risk reward. You've got this, I think, very small probability that this company goes bust or becomes essentially worthless, another crap stock. I'd put the odds of that at 1% or lower. The mid-range, I'd put the odds at 90, 95% that you're going to see $6, $7, $8 on your stock. That's 20x. And it's possible you get 25x. I think those odds are in the 85, 90, 95% range. The outlier that it goes skyrocketing in value, I don't put it at 1%. We don't know yet. But based on a lot of evidence, it is entirely plausible that rail engine is it. I'd have to say it's at least 50-50 that you could get a deca-billion Railtown value. But then the question is, do you get it inside of some, the stomach of one of these large companies, or do you get it early? And these are all variables we can't control. But Railtown is not a hot money day trading stock. It's not that. So please don't do it. Please don't do it. I do apologize. I'm sure I've driven people away from my audience by getting angry at some of these fudsters. And I'm tired of it. I'm worn out by this taking so long, and the stress of it. It's just human nature. You lose people, you lose interest, and I'm going to try to do better. I do want to start doing things we can have some impact and some control on. And everyone knows my email that you can reach me, farrandbalanced@gmail, Farrand with a D, balanced@gmail. And I want to take action on this gold story. I think it's late in the game. I think there's going to be potentially competition, and I don't want to screw anybody at all. But I think we have to act. So I'd love to turn you on. I'd love to just follow what I've been trying to do here now. It feels like 2 years. It's probably only a year, but I don't want you, all of us, I don't want us to be victims. I want us to be able to be actors who can take steps and address the things we can. And anyway, my next step is that gold story. All right, I'm going to sign off because I don't have anything else to say. That was a long day, but that's my main message to you. The band of outcomes for Railtown, the idea of crapping out and just getting nothing and it all sucks, I think, is as close to zero as possible. I think right in the heart of the valuation of where Railtown should be, you're going to get a snap up in valuation, and it's going to be, it's going to be swift, severe, and I can think of a word that begins with V, but I'm not sure I can use it. But it's just going to be like unbelievable as it moves. I don't know. Anywhere from 3 to 9. The midpoint is 6. And then there's no reason for it to come back down. None. And while it does all of that, I mean, if the bloody thing gets into a bidding war, and it is critical, I mean, 10 billion might be fine, but it might be 20 billion. You have $100 stock. Now, I give those, as the number goes higher, I give those less and less probability, but I'd put it at a flip of a coin that we're going to find out that the world that matters sees this as a critical layer. If that happens, you've never seen anything like it. And you get to ride a 20x, a 25x while you wait to find that out. That, my friends, is a perfect investment. It's not without pain. It's not without waiting. But you're not going to crap out in all likelihood. In fact, the most likely thing is you're going to make 20x, 25x on your money. But while you wait, there's a possibility that you just have gigantic returns if you don't think 20x is gigantic. So anyway, that was the educational lesson I was trying to show today. And we'll come revisit it again, but I've run out of gas, so I'm going to wish everyone good night. Happy Groundhog's Day. I hope everyone stays warm, and I hope people in Tampa Bay and other environs are safe down in Florida. That storm looks very severe, and stay warm. And I wish everyone peace.